हेलो एवरीवन, गुड आफ्टरनून, गुड मॉर्निंग, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव सेशन। स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे इंडियन मार्केट क्लोज होने वाला है। क्रूड ऑयल को देखोगे मॉर्निंग पे फ्लैट ही ओपन हुआ था, नीचे एक सपोर्ट बनाया था, वहां से एक बाइंग आई थी, ऊपर कल का हाई का रेजिस्टेंस, वहां से वापस सेलिंग आ रही है। नीचे आता है तो देखते हैं। वैसे तो ये लेवल टेस्ट कर चुका है एक बार, तो थोड़ा कम क्वांटिटी से फिर से देखेंगे। अगर ओपन इक्वल टू हाई बनेगी तो अवॉइड ही करेंगे। नीचे वाला एक सपोर्ट ये है यहाँ पर, फिर नहीं तो बाइंग का प्लान रखेंगे। नेचुरल गैस भी फ्लैट ही ओपन हुआ था, उसके बाद ये मॉर्निंग से कंटिन्यूसली गिरते जा रहा है। देखते हैं, इसमें एक नीचे सपोर्ट है, अगर वहाँ पर आता है तो। बीच में और कोई नया सपोर्ट बना नहीं है। 12:30 लंदन सेशन ऑलरेडी ओपन है, 5:30 न्यूयॉर्क सेशन, 7 PM यूएस मार्केट और 8 PM क्रूड ऑयल की इन्वेंट्री रहेगी। फोरकास्ट देखोगे लास्ट टाइम +3.8 आया था, आज -1.7 एक्सपेक्ट कर रहे हैं। मींस लास्ट वीक के कंपैरिजन में कम एक्सपेक्ट कर रहे हैं। तो फोरकास्ट के अकॉर्डिंग अगर कम आता है डेटा, इट इज़ पॉजिटिव फॉर क्रूड ऑयल प्राइस। प्राइस को ऊपर जाना चाहिए। तो फोरकास्ट तो प्राइस के लिए पॉजिटिव ही है। लेट्स सी एग्जैक्टली डेटा कितना आता है, एंड देन फिर हमारा मार्केट क्लोज होने के बाद एफओएमसी के मिनट्स रिलीज होंगे, तो वी विल सी दैट एज वेल। बट फिलहाल के लिए, अभी के लिए देखते हैं, कुछ मोमेंटम और करता है तो 3:30 थोड़ा वॉल्यूम कम हो जाता है, थोड़ा ध्यान रखना। एंड इसके अलावा और कोई न्यूज़ तो नहीं थी। कल ट्रम्प की ओर से 2 दिन स्टेटमेंट आए थे, जहां पर उन्होंने और टैरिफ लगाने के बारे में बोला था, स्पेशली मेटल्स पे, कॉपर के। देखोगे तो उस वजह से कॉपर का प्राइस भी अच्छा खासा चला गया था ऊपर। बाकी कल से देखोगे क्रूड ऑयल गिर, नेचुरल गैस सॉरी, गिरते ही जा रहा है, डजंट स्टॉप। कल हाई बनाया था वहां पर 296-97 का, देन लेक्स लुक्स लाइक कंप्लीटली फॉल। Okay, 1 minute, इंडियन मार्केट इज गोइंग टू क्लोज इन नेक्स्ट 1 मिनट। ठीक है, तो इंडियन मार्केट भी देखोगे, निफ्टी बैंक निफ्टी फ्यूचर में बात करूं अगर, तो बैंक निफ्टी भी मॉर्निंग पे ओपनिंग के बाद थोड़ा बहुत अपसाइड मूव जरूर किया था, हल्का सा गैप डाउन जरूर हुआ था, बट ज़्यादा नहीं। रिकवर कर लिया था उस गैप को, फिर लोअर एंड से बाइंग आई थी, बट क्लोजिंग होते होते ओपनिंग प्राइस के आसपास ही क्लोज हो रहा है, तो फ्लैट क्लोजिंग कह सकते हैं। नेगेटिव जरूर दिख रही होगी 83 पॉइंट, बट नॉट दैट मच। फ्लैट क्लोजिंग सेम निफ्टी फ्यूचर का भी है। निफ्टी फ्यूचर भी मॉर्निंग पर हल्का सा गैप डाउन ओपन जरूर हुआ था, बट रिकवर कर दिया था गैप फिल करके, फिर अपसाइड गया साइडवेज, देन क्लोज होते होते प्रॉफिट बुकिंग वापस। तो ये भी थोड़ा सा अपनी ओपनिंग प्राइस से हल्का सा नीचे क्लोज हो रहा है, बट कोई बहुत ज़्यादा नहीं, 50 पॉइंट ही है। 0.25% का अप या डाउन, ज़्यादा कुछ अप या डाउन माना नहीं जाता है। तो कह सकते हैं वॉलेटाइल कल भी आज भी। कल पूरा दिन बस साइडवेज, देन लास्ट में बाइंग आई थी, आज मॉर्निंग पे मोमेंटम साइडवेज देन सेलिंग। में टाइम फ्रेम पे ऊपर रेजिस्टेंस था तो उसको रिस्पेक्ट दिया है फ्यूचर में। बैंक सॉरी निफ्टी फ्यूचर ने, वैसे लग रहा था जैसे कंसोलिडेशन कर रहा था, एक बार में ब्रेकआउट करेगा, लेकिन कर ही नहीं पाया ऊपर। 25,670 का। ये तो क्लोज हो गया है 25,550 फ्यूचर, एग्जैक्टली वहीं पर क्लोज हुआ है। वाह। ठीक है, हो सकता है कल हल्का सा गैप डाउन ही हो, क्योंकि नीचे एग्जैक्टली सपोर्ट तो थोड़ा दूर ही है, और जिस तरह से कंसोलिडेशन होकर गिरा है, इट मींस ऊपर सेलर्स अभी भी स्ट्रांग ही है निफ्टी 50 में। परसों का जो लो बना था वो हमें देखने के लिए मिल सकता है वापस, 4 जुलाई वाला, 15 मिनट में एटलीस्ट 25,430। कल अगर एक गैप डाउन ओपनिंग होती है तो। नेचुरल गैस भी देखो थोड़ा सा नीचे आता है, इसमें भी एक बाइंग प्लान हो जाएगी। ये भी सपोर्ट के काफ़ी करीब ही है। इस पर्टिकुलर जोन से वैसे एक बार सपोर्ट ले लिया है, देखना पड़ेगा दूसरी बार फिर से लेता है नहीं सपोर्ट। बट या इट इज़ अराउंड ऑन सपोर्ट एरिया अप्रॉक्सीमेटली 275 276। ठीक है, थोड़ा सा नीचे आया, इसमें एक बाइंग का प्लान रखेंगे। एक लेवल से एक ही बार बाइंग सेलिंग आ रही है पिछले 2-3 दिनों से। स्टॉक में देखना कितना है। दूर है। थोड़ा सा वॉल्यूम आई थिंक डाउन हो गया है 330 530 तक हो सकता है थोड़ा सा वॉल्यूम इसी तरह से मूव करे, क्वांटिटी का ध्यान रखना। पर एक एफईजी है शायद जिस पर रुक रहा है क्रूड बार बार। थोड़ा सा नीचे आ जाता तो एक बाइंग प्लान जरूर है। ऐसा ना हो कल की तरह ही फिर साइड में चला जाए और फिर ब्रेकआउट कर दे। पुल बैक ही नहीं आ रहे हैं उतने प्रॉपरली। कैंडल ओपन इक्वल टू। अगर क्रूड ऑयल वापस अगर ऊपर आया तो फिर थोड़ा सा अपर लेवल से सेल करना, हाई लोअर एंड से सेल मत करना। बेस्ट तो यही है कि नीचे आ जाए यहाँ से बाइंग आए। बट अगर ये यहाँ से जंप मारता है ऊपर की ओर वापस तो फिर 5923 इस एरिया के आसपास सेलिंग होगी। कि फिर वो डेफिनेटली ट्राई करेगा एक बार एसएल उड़ाने का। उस केस में हम अपना लेवल भी चेंज कर देते हैं। ठीक है, तो बेस्ट केस सिनेरियो तो यही है कि यहीं से नीचे आए। लेट्स सी। अगर नहीं आया तो फिर यहाँ से अप साइड पे सेलिंग होगी। ऑल डिपेंड अपॉन 530, मोस्टली 530 के बाद ही मूव आएगा। यहाँ पर काफ़ी देर इसने ट्राई किया सेलिंग के लिए, नीचे सपोर्ट था। इसको यहाँ पर नहीं, रीटेस्ट कर सकता है ये इस लेवल पे। चाहो तो आप प्रॉफिट बुक करके ट्रेल भी कर सकते हो। 583। ये सपोर्ट, ये रेजिस्टेंस, रेजिस्टेंस से सेलिंग आ गई, सपोर्ट से बाइंग आई। देखो नेचुरल गैस थोड़ा सा नीचे और आए तो बाइंग करें, बट नहीं आ रहा है, स्टक हो गया ये भी 1 घंटे से सेम लेवल पे। यहाँ पर भी एक छोटा सा सपोर्ट दिख तो रहा है, बट वो ऑलरेडी अपने 50% लेवल को टेस्ट करके आया है, तो यहाँ पर बाई करना थोड़ा सा सही नहीं लग रहा है नेचुरल गैस में। ऑलरेडी 2%, 2.5% डाउन है। कम ऑन गाइस, लाइक भी करते रहो जब तक। डोंट फॉरगेट टू लाइक द स्ट्रीम, जिन लोगों ने लाइक नहीं किया अभी तक।
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on the trade wars. President Donald Trump is promising to press ahead with his plans for aggressive tariffs. He says there will be no extensions to his August 1st deadline for higher import rates. That's after the president said he wasn't 100% firm on the new date earlier this week.
It wasn't a change. It was August 1st. We don't change very much. Every time we put out a statement, they say he made a change. I didn't make a change. A clarification, maybe.
And at his latest cabinet meeting, heard live here on Bloomberg Radio, President Trump said he will impose a 50% tariff on copper products entering the U.S. He floated even higher rates on pharmaceuticals.
We're going to give people about a year and a half to come in, and after that, they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
And despite progress with the European Union, President Trump says he may announce a new tariff rate on that bloc within the next 2 days due to their taxes and fines on U.S. tech firms. The president says at least 7 countries could find out their trade status in letters later this morning.
Meanwhile, Nathan, Treasury Secretary Scott Bessent says the tariff hikes are bringing in big money to the U.S. He also spoke during the cabinet meeting.
We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariff, the major tariff not having started till the second quarter. So we could expect that could be well over $300 billion by the end of the year.
Treasury Secretary Scott Bessent says a major jump in tariff collection will start on August 1st when new tariff rates take effect.
Karen, let's get to the latest now on the disaster recovery in central Texas. Search crews continue to slog through thick mud and debris looking for any survivors of the catastrophic flooding along the Guadalupe River. Texas Governor Greg Abbott says 109 people are confirmed dead and at least 161 may still be unaccounted for.
The hearts of our fellow Texans are breaking every single day because of what people of this community and the surrounding area are going through.
Governor Greg Abbott toured the disaster zone yesterday. Texas game wardens say their crews have searched more than 26 river miles with helicopters, drones, boats, and canine units. They say their team alone saved about 444 people and recovered 30 bodies. President Trump plans to visit the area on Friday.
Nathan, the U.S. will start charging interest again on student loans. The Education Department says it will begin collecting from an estimated 7.7 million borrowers who have been in legal limbo since a repayment plan created by former President Joe Biden was blocked in court. Interest charges for people enrolled in the Saving on a Valuable Education or SAVE program will begin on August 1st.
Let's turn to markets now, Karen. Apple is losing more talent. Let's get the latest with Bloomberg's John Tucker. Who's Apple losing now, John?
The number 2 man, the chief operating officer, Jeff Williams, is retiring. The 62-year-old Williams was actually once considered a possible successor to the CEO, Tim Cook. Sadiq Khan will replace Williams as the COO, while Apple's design team, that's going to shift to reporting directly to Tim Cook. Now, at Apple, Williams was known for crafting a supply chain that could handle hundreds of millions of devices a year, while also sourcing components from thousands of suppliers around the world. A huge job. Well, this marks a major changing of the guard at an already tumultuous time for the iPhone maker. Yesterday, you'll recall we told you about the departure of Ruming Pang, a distinguished engineer and manager in charge of the Apple Foundation Models team. He's headed to Meta. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. A disappointing first day of Prime sales have led to a drop of 1.8% in Amazon shares. Momentum Commerce says sales fell almost 14% in the first 4 hours of the event compared to the same time last year. Bloomberg's Spencer Soper says there's one major change this year.
It's a 4-day event this year, as opposed to 2 days. So it's still interesting to see that out of the gate, it was soft. But they've spread this over 4 days now. So the question is there less of a sense of urgency among shoppers like, oh, that's a good deal, I better buy it now before we run out of time?
Bloomberg's Spencer Soper says Amazon launched Prime Day in 2015 to attract new subscribers who pay $139 a year for shipping discounts, video streaming, and other benefits.
In other tech news, Karen, OpenAI Chief Executive Officer Sam Altman says he has not yet spoken to Mark Zuckerberg since the Meta Platform CEO poached some of his top engineers. Altman talked about it with reporters at the Sun Valley Conference in Idaho.
I think we have obviously we have an incredibly talented team, and I think they really love what they're doing. Obviously, some people will go to different places. There's a lot of excitement, I guess we could say, in the industry.
OpenAI's Sam Altman says Meta offered individuals as much as $100 million to jump ship. He says he expects to meet with Zuckerberg at the Allen and Company gathering this week.
Nathan, sources tell Bloomberg that SpaceX is discussing plans to raise money and sell insider shares in a deal that would value the company at $400 billion. And we get more with the Bloomberg technology reporter Ed Ludlow.
Right now, the share price being discussed is $208 to $212. There's still a little way to go. It could change. But it's quite a jump from the last valuation that we reported of $350 billion. Part of that reflects, of course, not just SpaceX's position in dominating commercial launch, but the Starlink component as well.
Bloomberg technology reporter Ed Ludlow says this would mark the largest ever valuation for a privately held U.S. company.
That's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Karen Moscow, and this is Bloomberg.
Get the edge at the end of the market.
Going to be a lot of negotiations. There's going to be, I think, a lot of deals struck. And we continue to see this administration use these tariffs as tactics and as tools. And that does not appear to be changing.
All right, and not only are the tactics not changing, but they are continuing to evolve. Trump in a cabinet meeting today said he's also moving forward with those separate Section 232 tariffs that target specific products. That includes a crippling 200% tariff on foreign-made drugs and a 50% levy on copper, which is double what the president had mused about just 3 months ago. In fact, front-month COMEX copper futures settled 13% higher in New York at a record $5.65 a pound today, a startling reminder that betting on Trump's bark being worse than his bite is not as sure of a thing as some would believe. So if there's any big takeaway from the past couple of days, it's that tariffs appear here to stay, Shonali, and so too does the market volatility.
I have some different alliteration for you this afternoon.
I love alliteration.
We have Titans and tulips here, according to Bloomberg Intelligence.
Wow.
You were talking about tariffs. Gina Martin-Adams had put together baskets of the least tariff-exposed stocks and the most exposed. The least exposed have truly rallied. If you take a look at it, it's up almost 19% since the beginning of February, almost 20%. But the most exposed, these are companies like HP, Bristol-Myers, Best Buy, Merck. They have not only trailed, they are still down almost 5%, despite a rally here since the April lows. So we will keep an eye on just how much these guys can catch up as we head toward that August 1st new deadline, Romaine.
Certainly an August 1st new deadline with the markets near record highs and a lot of questions for investors as to how you allocate, if at all. Abby Yoder joins us right now, U.S. equity strategist at J.P. Morgan Private Bank. Kicking us off to the close. Great to see you, Abby.
Great to see you.
A few days ago, a lot of folks were celebrating the big, beautiful bill and some of the potential economic upside that might provide. And, of course, over the last couple of days, they have a reminder that there are still a lot of headwinds to this economy, particularly when it comes to trade and tariffs. I am curious as to how you see this potentially playing out for the markets. Is this an investable opportunity, or is this one of those situations where you have to sit on the sidelines and wait for things to shake out?
I mean, so we definitely think it's an investable opportunity. I think, to your point, there are different headwinds and tailwinds that are happening kind of at the same time, which is what we've been talking about for the majority of the year, right? The focus for the first couple of months was really on those growth negative policies as it relates to immigration, tariffs, what have you. And now that the reconciliation bill is through Congress, I think, and signed by the president, I think the focus will turn back to the tariff noise. And the expectation for us is that these stay between 10 to 15%. Like in our base case scenario, we still have them at those levels. And right now, the effective tariff rate is something like 8%, just based on what companies have been doing to kind of maneuver around the tariff rates. But we do have that 10 to 15%. It's really about the resilience in corporate America that stands out to us and why we're still bullish going forward.
Well, that's what I'm curious. I mean, earnings season, ostensibly, it actually starts this week. I think we get Delta on Thursday, and then, of course, next week we get the big banks. And there's going to be a lot of questions about not so much what happened in the past quarter, but obviously the guidance and the commentary on the conference calls. Do you have confidence that not only will the bottom lines for these companies and margins and things like that will actually hold up, but more importantly, that the CEOs, CFOs will be confident enough to guide maybe potentially higher for the rest of the year?
Well, what was interesting is coming into 1Q, we actually thought it was going to be similar to what we saw in March 2020 when you saw a lot of or April 2020 when you saw a lot of companies just pulling guidance, right? And you really didn't see that. Only 1% of companies actually pulled guidance. They really did try to come up with a framework, how to think about what might happen, different scenario analysis. And I would say in terms of like your question around what happens with the bottom line and what happens with guidance, I think 2Q is going to be really important because it's going to be the first real time that we actually see the effects of tariffs. But expectations are really low. 2Q earnings expectations have been revised down. Earnings have been revised down north of 4%. Historically, it's something closer to 3%. And that's really coming from margin contraction. And I think, I think a lot of corporate America will show that they're much more profitable than expected.
How are you thinking about this across sectors, especially as we get closer to those 232 tariffs? Those were really the big question mark, weren't they, for so long? Are you willing to make bigger bets on areas like pharma, for example, which has underperformed, still negative on the year, but might now have a little bit more time to work through these tariffs?
So pharma in particular is, it's kind of a hotbed of policy risk right now. It's not just the sectoral tariffs, which were thrown out, like you mentioned earlier, 200%, whether or not that's true. And he did give them leeway in terms of like a year and a half to implement and work around. But they also have drug pricing on the, most favored nation being thrown out there. So there's just a lot of things going on for that sector in particular, where no matter how attractive the valuation looks at current, trying to get the right earnings number is really difficult. So whether or not that valuation is actually correct is difficult in this environment.
The headline risk, just generally, that goes through August, maybe longer. Does the market feel frothy in some corners, given the run-up we've seen since the April lows?
Well, I mean, at north of 22 times, yeah. I mean, it's a little bit hard to defend, right? We're back to basically where we were at the beginning of the year when we were at previous all-time highs. So it becomes a little bit harder from a valuation perspective. And in our base case, we do have valuations coming down to like 20.5 to 21 times. So we do have them coming down. But that doesn't mean, this is a strong momentum market, and there's a lot to be excited about.
I know we're focusing a lot probably when we're talking about these earnings estimates on the S&P 500, but I'm curious your thoughts more on the small cap space. We're seeing over the last few days, we've seen several sessions where we've seen meaningful outperformance in the Russell, in the S&P 400 mid caps, and some of the other indexes that track, I guess, some of the more cyclical or economically exposed stocks. And there does seem to be maybe a little bit more optimism.
क्रूड ऑयल में अपना हाफ प्रॉफिट एटलीस्ट बुक करके चलना है, यहाँ पर रुक सकता है, थोड़ा सा वापस ऊपर आएगा तो वापस हायर लेवल से सेल करना, यहाँ पर सेल मत करना, ठीक है? यहाँ कहीं से सेलिंग होगी वापस, अगर ऊपर आता है तो नीचे आ जाए तो वेल एंड गुड, नीचे बाइंग प्लान है 5825 से 5835 के बीच में कहीं पर भी, बट वॉल्यूम थोड़ा डाउन है। 5 PM ऑलरेडी हो चुका है, 5:30 पे न्यूयॉर्क सेशन की कैंडल थोड़ी इंपॉर्टेंट रहेगी अगेन, कैंडल ओपन इक्वल टू हाई नहीं बननी चाहिए। नेचुरल गैस आया नहीं एग्जैक्टली, एक ऊपर वाला सपोर्ट था वहीं से रिटर्न कर गया।
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Annabelle Rulers in Hong Kong.
I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episodes every month, only on Bloomberg Television.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
NFIB, small business optimism ticking lower in June on worries around the tax impact of President Trump's so-called Big Beautiful Bill signed into law last week. Nearly 1/5 of small business owners flagged taxes as their top concern, the biggest share in almost 4 years. Let's bring in Matthew Luzetti. He's the chief U.S. economist at Deutsche Bank. When you look at the tax bill, a lot of people have already been pointing out the disparities between lower-income Americans, higher-income Americans, and who benefits more. How does that play out between smaller and bigger businesses? If bigger businesses benefit more, then what kind of chance do smaller businesses that really drive the heartbeat of this economy have?
Yeah, I think you certainly see that in the data. And first, from a consumer perspective, you see across the income distribution. A lot of benefits are going towards the upper part of the income distribution. The spending cuts that are happening for Medicaid, SNAP, and those items are more than offsetting the tax cuts at the bottom part of the income distribution. As I looked at the NFIB data today, it was absolutely interesting that there's concerns around taxes, given that tax cuts are being delivered. I think that probably also reflects cost pressures that are there from the tariff side. Tariffs are certainly leading to increased cost pressures. And while I don't pay as much attention to the top line number in terms of optimism, it surged in November, came back in April. I think some of the underlying details are really interesting. The employment components have been really stable in recent months. And you actually see that they're planning to increase prices at the highest level in several months.
So when you think about the overall administration strategy, of course, tariffs is guiding a lot of the discussion for today, certainly will be the case for the rest of the summer. What is the Deutsche Bank playbook? How do you do the new math every time the president makes a new statement?
Yeah, so I think what we've learned is we don't want to change our forecast once we get announcements, and we want to see where everything settles. And so we didn't really change our forecast all that much after the April 2nd announcements. We thought that they would kind of pull back, and they did. At the moment, we're taking the same approach, where if you were to take literally what they're announcing on the tariff side, you would increase your inflation forecast, probably mark down your growth forecast. That would have offsetting views for how we think about the Fed. But if you just take the announcements yesterday, that would add about 1.5 percentage points to the average effective tariff rate. That would probably add about 15 basis points to inflation over the next year. If you were to then add on top of that copper pharmaceutical tariffs, that adds substantially to our view on tariff rates.
It's kind of interesting, too. We talk about this, and I know as an economist you have to map this all out, but we're still kind of somewhat in the theoretical phase of all of this because a lot of these things haven't taken effect. But there are other things outside of tariffs that are also, to a certain extent, anecdotal or theoretical that have impacted the economy, including immigration policies. And I am curious as to how you try, if at all, to model that in to try to determine exactly maybe where the activity is and, more importantly, where it isn't.
Yeah, a lot of the shocks that we're seeing for the economy, these policy shocks, certainly if you look at immigration and trade, are what we call adverse supply shocks. They tend to reduce growth and lift inflation. Immigration, I think, has come into increasing focus, given some of the policies that we've seen, but also through the lens of the labor market, because how we view the jobs report each month is going to be different with immigration flows being curtailed. As an example, I think a new normal for the monthly job numbers that we see is probably somewhere between 50 and 100,000. If you go back to last year, kind of the monthly break-even payroll number was above 200,000.
Yeah.
And so another way to say that is to keep the unemployment rate steady, you probably only need 50 or 75,000 jobs per month being added.
Is there a legitimate case to be made, at least in the minds of an economist, for cutting rates now? And I say that because the Trump administration, Trump himself, I should say, has really been beating that drum. In fact, just a few seconds ago while you were speaking, he's out with another social media post. Cut interest rates, Jerome. That's a direct quote here, so maybe a softer tone than what we've heard in the past. But it gets to this idea. I understand why he wants this, but it gets to the idea of whether Jerome Powell and the other Fed members could even make a legitimate case either at the July meeting or at the September meeting to cut rates.
I think it's unlikely. And if you look at it, Chair Powell has stated that if it were not for tariffs, they may have continued with rate cuts. I think if you just look at the economy and take a step back and look at their dual mandate, the case is not clear at all. Core PC inflation is 2.7% today. It was 2.7% a year ago. It's actually a little bit higher than it was a year ago. Over the first 5 months of the year, core PC inflation is up 3% annualized. The unemployment rate is 4.1%. It's below what the Fed thinks maximum employment is. There's no case from a dual mandate perspective for the Fed to be cutting rates today. I think the economy is actually very consistent with a much higher neutral rate, that the economy can just operate, be more resilient with rates at these levels.
To square this circle, you have the president saying in that post that he's looking at a recent study by Stephen Myron, chair of the Council of Economic Advisors, saying the same thing that Scott Bessent, the Treasury Secretary, said on our network last week, which is there's no impact from inflation from tariffs, right? There's no inflationary impact so far. How then do you take the Wall Street math against the Washington math?
So I think I would generally agree with that assessment, which is if you look at the inflation data so far, there's not a clear big inflation impact. But that's actually more concerning because it tells you even before the tariff effects, inflation was stuck at higher levels. Core PC inflation was at 2.7%. We still expect that those tariff effects are going to happen. Next week, we expect to see a 0.3% core CPI print. If you look at some of the leading indicators, the PPI has already been showing some of the uplift. That tends to take a little while to filter through into the CPI data. So we think it's going to happen. Obviously, there's lots of uncertainty about the timing and ultimate impact, but we still think that those effects are to come.
You think you're going to get a summer break this year?
I'm not as hopeful as I was a few months ago, unfortunately.
All right. Matthew Lazzetti, Chief U.S. Economist at Deutsche Bank. As we continue here on the close, counting you down to the bells, a conversation up ahead about what's going on in Washington, because that, of course, is what's driving Wall Street. Lonnie Chen, David and Diane Steffi Fellow in American Public Policy at the Hoover Institution, joins us next. This is Bloomberg.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
All right, let's get a quick view from the sell side with our top calls. Big movers on the back of analyst recommendations with a big focus on Washington driving the Wall Street story. We start with KeyCorp. UBS upgrading the regional bank today to buy from neutral and boosting the price target to $22. The analyst saying that that company will be an outsized beneficiary now that the, quote, worst case scenarios on the economy from tariff policy are off the table. We should point out that note was published before today's developments. The shares up about 1% on the day. Next up, Sunrun. KeyBank, the sell-side shop over at KeyBank, raising the solar stock to sector weight from underweight. The firm also boosting SolarEdge to sector weight, citing easing regulatory risk. This after a provision denying investment tax credits to leased equipment was modified to exclude solar in that big, beautiful tax bill. Nevertheless, you see the shares down about 11% on the day, and those are some of our top calls. We do want to stick with this theme, though, the intersection of Washington policy and Wall Street action, and bring in Lonnie Chen. He's the David and Diane Steffi Fellow in American Public Policy Studies at the Hoover Institution at Stanford University. I'm pleased to say he joins us here on the East Coast in New York.
Great to be with you. Thank you.
All right. We have to start talking about some of these developments that we've had just over the last few hours, because we mentioned that one call. Obviously, the analysts last night, it did look like maybe we had some tariff certainty or tariff clarity. We have a new deadline. July 9th is now August 1st. We have maybe potentially new tariffs, 50% on copper, maybe 200% on pharmaceuticals. What exactly is the negotiation tactic at this point, in your view?
Well, I think if we could answer that question, we'd all be, in a different line of business, different line of work. I think there's a couple of factors at play here. First of all, the president has been committed to tariffs for his entire political career. This is not a new position. We all know that. That desire, that interest is meeting the reality of how markets have reacted to the more extreme tariff positioning. So I think what you're seeing is a little bit of a real-time negotiation. The administration is trying to work out what is feasible, what is possible. And of course, most of these negotiations are multi-sided. So if you think about the Japan negotiation, the Korea negotiation, if we were having this conversation in April, we would have said those are going to go really well. Well, now we look at those negotiations and we're not so sure. Europe looks to be going well. We never would have guessed that. So there's a lot of real-time adjustment, I think, that's happening here as the president approaches these questions.
And there's been a big betting game in markets, this idea that he either wasn't serious about this, that this was just a negotiating tactic. But I just want to draw your attention to something he said at his cabinet meeting that he had earlier today. He went on a very long rant about McKinley, of course, who he's mentioned before as having been some sort of inspiration for his own tariff policies. And he talked about the policies of his successor, Roosevelt, and the idea that a lot of those policies were paid for by the tariffs that McKinley imposed. Now, I have no idea historically if that's true or not, but it does get to his thinking that maybe this isn't just a negotiating tactic. Maybe he truly does see at least some level of tariffs as necessary to fulfill his policy dreams.
Yeah, there's no question, Romaine, that some of this is about a philosophy, about what the American economy should be. And if you look at it in that whole, if you think about a philosophy that says we need to manufacture more here, we need to figure out how to promote a middle class with a certain kind of set of jobs, then it all kind of makes sense. I think the challenge is that the policy at various points has been sometimes about readjusting the economy, other times about being punitive, other times about just trying to get a deal. I think that what the White House needs to do is to put a little bit more of this philosophical underpinning into what they're doing, because that will help market participants understand this is what the end goal is for the president. I think the challenge is the president himself likes to use tariffs in all of these different ways. And there's not necessarily a singular consistency around why these tariffs are being put in place.
Well, let's just take one, manufacturing. How do the sectoral tariffs compete with that objective? Because if you're trying to make this a manufacturing economy, then wouldn't sectoral tariffs make the inputs much more expensive?
Yeah, and look, there's a big challenge here, right? Because if you look at some of these sectors, let's just take pharmaceuticals as an example, since we talked about this 200%, which I don't think is ever going to happen. But think about how hard it is to move parts of that supply chain back into the United States. Is it a noble goal to say we should be producing more in America? By the way, we do a ton of R&D in America. Yeah. We do a ton of innovation in America. The fact that we don't do the production in America, there are some downsides to that. We saw it during COVID. We saw some of the supply chain issues. But the idea of reshoring that whole supply chain is incredibly challenging. So we probably won't ever get to that point. The question is, how far along is far enough along? So these sectoral tariffs, some of them to me make a lot more sense than others. Pharmaceuticals, I think, are more challenged. But if you start to look at some of the commodities that are being tariffed, for example, maybe there's more of a case there.
Because you have the experience in this space so deeply, beyond the tariffs, the tax policy, how is that going to play into the midterms when you have a lot of low-income Americans and a lot of Americans losing Medicaid access in the next couple of years? What does it mean in terms of how they're going to show up to vote, especially when you have another billionaire in the corner trying to form a new political party and really influence the outcome of what this Republican Party looks like at the end of the midterm?
My own view is Republicans need to do a better job of selling this thing. In other words, this is really about tax relief for all Americans, many of whom are in the middle class. This is about how the tax system really needs to be oriented for the U.S. economy to be more competitive. And frankly, if they didn't do this tax bill, if they didn't get this across the finish line, the implications for the markets would have been significant. The implications for the American people would have been significant. So this was a must-pass piece of legislation for a lot of different reasons. Now, the Medicaid piece, the SNAP piece, those are things that politically Republicans are going to have to deal with. They're going to have to figure out how they message those issues, how they talk about those issues. But the midterm elections, that to me is the most interesting part of this big, beautiful bill now, is now that it's been passed, how will it play politically? What does it mean for Republicans trying to retain control of both houses of Congress in some congressional races that'll be very tight?
You know, really interesting here, and within just 30 seconds, how do you feel about the prospects of the party coming out of the midterms? Do you think that Americans do like this bill, very simply?
I don't think Americans know what's in it, really. So I think it's incumbent upon Republicans.
It was long. A lot of senators did.
I'm not sure people who voted on it knew what was in it. But it's incumbent upon Republicans to make the argument for it, and Democrats will make the counter argument, and we'll see who wins. The thing about politics is we have a result to point to, and the midterm elections will be definitive in that regard.
Lonnie Chen, David and Diane Steffi Fellow in American Public Policy Studies at the Hoover Institution. We thank you for joining us here on set. And coming up, we're going to talk about Amazon. Amazon Robotics deployed its 1 millionth robot in the lead up to Prime Day, which kicks off today. We're going to speak to the Vice President of Amazon
Robotics. 1 million of these things walking around somewhere?
I guess so. We could ask Scott Dresner. He could tell us just how many and exactly what they're telling people to find those discounts, Romaine.
I've seen a movie about this. Did not end well.
This is Bloomberg.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Shanali Basak. We're looking at a choppy trade as the president outlines his tariff strategy. He says August 1st is the date. Let's see if that sticks.
Yeah, and you have a market that's really kind of been in stasis, at least in the broad large cap space. The S&P 500 unchanged. Biggest drag on the S&P, believe it or not, is actually coming from Amazon today, and that's despite the fact that they're kicking off this 4-day Prime Day as days. It's Prime Week. They should just name it Prime Week at this point. Obviously a big shopping event for them where a lot of discounts offered by the sellers on the platform. And of course that means a lot of work for all those workers in those warehouses and maybe some of the non-human workers.
Yeah, the robots. Yeah. I want to see how the robots are being put to work. And as Romaine was saying, one tool Amazon is using is robots. Joining us now to discuss those robots, Scott Dresser, Vice President of Amazon Robotics. We were talking a little earlier about how you've deployed your 1 millionth robot. And on a week like Prime Week, if you'll give us the liberty to call it that, how do you see these robots really taking off to meet demand? And do you see them carving new ways for you to start serving customers?
Yeah, so super proud of some of the accomplishments we've had here in the robotics team. A big part of what's happening is part of a super important 4-day Prime Day event for us today. One of the things that we know is important to our employees is to have a safe and productive work experience. Obviously, the robots that my team works on are aimed at providing them with the tools that they need to deliver on a really big Prime Day that we're looking forward to and just kicking off here on this first day.
How strong are these robots? As you're developing them too, ultimately, how much weight are they supposed to be carrying?
Yeah, they can. Each one of those robots can lift over 1,000 pounds, right? So one of the things that they do, as you can see here in some of the videos, is they move our mobile shelving pods around. That's great because that means it eliminates walking for our employees. So they might have to walk many steps through the warehouse every day. The robot can help them do that, and some of the mobile robots that you see here in the video are doing that. We also have manipulating robots, robots that can do things like pick up customer orders and sort them and pack them into containers. And that's, again, great for our employees. It eliminates some of the repetitive motion, some of the heavy lifting, and provides our employees with that great work environment and a safer work environment for them and delivering a big day like today as part of Prime Day.
I'm curious if you could kind of talk about also the evolution of this. Obviously, your perch at Amazon was largely through an acquisition, a robotics company that effectively really did transform these warehouses. I think that is just a fact. It's not an opinion. When you talk about just the efficiencies and being able to find things, bring them out to the workers to pack up and move on. But that was quite some time ago. I think 2012, that acquisition was, so more than basically a dozen years ago. And it now raises a question as to what's the next step, Scott? I know we've talked a lot in this program about humanoid robots, robots that are a lot more functional than just those low squat things that we just saw rolling around on the screen there. How far do you think this actually goes?
Yeah, we think the sky's the limit here, right? I think we have a great opportunity ahead of us, taking some of the types of robots that we have today. So those are the mobility robots that again we've seen moving products around, the manipulators that we see moving products and packages around our facilities. These are great tools for our employees, again, to keep them safe, to keep them productive, and provide them with a great work environment. You mentioned humanoids. It's a question we get a lot. It's an area we're interested in all different types and form factors of robots. But again, there's a lot of space in between the robots that we have today and the humanoid robot. And we think that one of the most important investments as part of that is a little less about the physical embodiment of the robot, but how important artificial intelligence is going to be as part of that, right? This is something that is really helping us make the robotic experience and the tools that we provide to our employees better again for their work environment. The robots can be smarter, more intelligent, and help them collaboratively in the roles that they're doing on site.
So we'll explain a little bit more on the AI side of this, Scott. So we're talking now, I mean, basically the robots that you have right now effectively do whatever you tell it to do. Is the idea that you think it can evolve to the point where they can make decisions on their own? Is that an overstatement?
Yeah, I think what we're excited by is the ability of, if you think of what we do in an Amazon environment, we have to deal with a huge variation of products. We sell 300 million different types of products, and to have a robot that can deal with that variation requires an intelligence that's not commonly found today. And that's one of the places where we're really excited that artificial intelligence can help build and extend the capabilities of our robots, just dealing with the huge variety of things that we see in the types of environments that we have in our warehouses. Again, aimed at helping our employees really deliver a great experience to our customers, finding the price and the selection that they want off our website.
What's the math like? At the end of the day, are there very specific cost savings you can see from using these robots?
Yeah, I mean, obviously, like I said, our first and foremost, we're focused on safety. We're also focused on productivity, making the work experience of our employees even better. We're super proud of some of the new jobs that it's creating and for our employees as well too. One of the ones I love to talk about is you can imagine as we put more robots into our warehouses, we need people like car mechanics, right? And they're robotics maintenance technicians. And these are places where we're investing a lot in upskilling our employees to develop new skills to deal with this new robotic world.
I'm curious, Scott, where are you able to make these robotics? There's obviously been a lot of talk in Washington, of course, about reshoring a lot of manufacturing. And I know that some of the projects in the past that Amazon has worked on in this space did rely on domestic manufacturing to some extent. Is that a big part of what you're using right now?
Yeah, Romain, I'm glad you asked that question because I'm actually sitting here in a facility outside of Boston, Massachusetts. We have, I just came up from the robotic manufacturing facility here where we actually built the millionth robot that you talked about earlier. A great opportunity, great team, an advanced manufacturing team here that has actually built all the mobile robots that we have in the worldwide network today, right here in the United States.
Scott, we thank you so very much for joining us today. Very best of luck as you continue on through the rest of the prime days ahead. That is Scott Dresser, Vice President of Amazon Robotics. Now, we've got a scoop on SpaceX. The company is planning to sell shares from insiders at what could be a $400 billion valuation. Bloomberg's Ed Ludlow here with more, joining us live from Sun Valley, Idaho, covering the annual Allen & Co. conference. Missing you, Ed. Usually like walking around with you and bugging all the billionaires to see what they are up to. When it comes to SpaceX, it's really interesting. The investor base is very broad and wide. Right. What do we know about the latest financing?
Yeah, so around $400 billion valuation, maybe greater than $400 billion. Right now, the share price being discussed is $208 to $212. There's still a little way to go. It could change. But it's quite a jump from the last valuation that we reported of $350 billion. Part of that reflects, of course, not just SpaceX's position in dominating commercial launch, but the Starlink component as well. And you talked about the investor base, like you have some of the biggest names in private growth equity and venture capital and the bigger family offices in this name. But the other investor appetite, the broader part, is on the hope that in the next few years, there might be some kind of spin-off of that Starlink business, which continues to grow robustly.
I mean, I have to ask you, Ed, I mean, there's been so much discussion over the last couple of days about Elon Musk and his leadership role at Tesla. I am curious as to what the leadership roles look like right now at SpaceX. I know as a figurehead, he's certainly prominent, but most of the work there is not necessarily being done by him.
It's a really good observation. And when you think about the mechanics of this round, which, by the way, is basically a concurrent primary, very small primary round that sets the price, then a much bigger tender or secondary, which gives employee liquidity. That is something that's overseen by the CFO of SpaceX, also Jared Birchall, who runs Elon Musk's family office, in coordination with the rest of the Treasury team there, and the board. Met very recently and talked about this. Of course, the structure of SpaceX is that they have Gwynne Shotwell as president and essentially COO running day-to-day operations. But I do increasingly hear that, Elon Musk turns up when it matters at the big moments. We saw him speak publicly about Starship at the last attempt. It does beg the question, could the valuation have been higher? I had heard at various points in recent weeks a much higher valuation was discussed, but obviously Musk right now is very focused on his, what should we call it, tit for tat with the president.
I, in a conversation with one of the banks, for example, that works with their clients on buying some of these shares, I'm hearing that it's one of those things nobody wants to let go of. So it's something where the stock becomes in very short supply. The valuation has just absolutely skyrocketed. How does this compare with the rest of Musk's empire? Because obviously we're not seeing the same kind of love in every stock, if you know what I mean.
Yeah, it's why I think the mechanism is very interesting, right? This concurrent, very small primary, the sale of very limited number of new shares to set price and valuation, the main thing being the tender for employee liquidity. But as we've reported on, it really is a matter of who you know. Do you know Jared Birchall, who runs Elon Musk's family office? Do you know the CFO at SpaceX and Gwynne in order to get in on those rounds? Similar structures at XAI. XAI has used debt and primary or fresh equity raises, and secondaries have played a part across Elon Musk's empire, and then you have the Tesla public component. Yeah. But again, the demand on the secondary market for this name is so high all the time. It's almost a liquid market when you take into account SPVs and block sellers, things like that. But it is still hard to get, and it's hard to get in.
Yeah. All right, Ed Ludlow there. Of course, the news there, the new valuation for SpaceX, which continues to shoot towards the moon or maybe to Mars, around $400 billion in that buyback. Some breaking news crossing the wire while he was speaking. This coming out of the Supreme Court. The Supreme Court backing President Donald Trump's effort to drastically reduce the size of the federal government. Remember, a lot of those cuts that came earlier this year, primarily out of those DOGE efforts, had been blocked by a judge, a lower court judge, that went to the Supreme Court, that has now cleared the federal government to continue forward with slashing the workforce at least 19 federal departments, potentially affecting hundreds of thousands of jobs. All right, we do want to get back to markets as we continue to count you down to the close. Just about 18 minutes to go until we get there. And one of the big movers on the day is Datadog, down about 4%, worst day going back to April 4th. This after Guggenheim cut its rating on the stock to sell, citing its fraying relationship with its largest customer, OpenAI. The analyst writing that OpenAI may have already started to move off Datadog for log management onto its internally built solution. Mandeep Singh is the global head of technology research at Bloomberg Intelligence, and he joins us right now to explain what the heck is going on.
Well, I mean, Datadog is one of the category leaders in this observability market, and think of observability as a must-have tool. If you have a large cloud infrastructure, you need to monitor the infrastructure to make sure, it's up all the time. So in the case of OpenAI, we have seen the exponential growth OpenAI has had, and that has resulted in almost $100 million Datadog bill.
Yeah.
The consumption has increased to that extent where they have to decide, are we going to keep paying $100 million on a recurring basis or bring that in-house? And that's what I think the call is about, that they will eventually end up bringing that in-house.
Yeah.
My sense is this is not a new category like a coding agent where OpenAI will develop a product and sell it to B2B customers. So this is more for internal cost controls. But
well,
who
how
knows?
far can the relationship with OpenAI go in terms of helping support Datadog, its valuation, its potential in the future? Because sprinkling OpenAI on companies has been like sprinkling fairy dust this year.
Yeah, I mean, look, OpenAI now is one of the largest customers for Datadog, so almost 3 to 4% revenue customer. At the same time, Datadog's net retention rate, churn rate is so solid that I don't think it trickles down to other customers. It's not as if other customers will all develop their own in-house observability stack. So this is more of a unique OpenAI situation because of that $100 million bill. Maybe they are thinking of going public and they're cleaning up their costs, so that it doesn't stick out in the S1.
I am curious. I mean, as we talk about AI and, of course, all of the things that potentially will grow out of that, there's been a lot of talk about devices. What's going to be that big AI device? There was an interesting story a little bit earlier on the Bloomberg terminal, citing people familiar with this situation, that Meta was taking a minority stake in EssilorLuxottica, which basically makes, if you ever bought glasses, they probably were in some way or another made by Luxottica. It's only about a 3% stake, but it's $3 billion worth. And I'm curious, not so much as to what they're paying, but what's the end game here? Is this where Meta sees the future in eyewear?
Well, it's still less than the payment that they are making for the AI researchers. So clearly, it builds. But at the same time, look, Meta is looking to build that AI model that they can roll out across their family of apps, across their devices, the Ray-Ban glasses.
Didn't you have a pair of those?
I did, and it didn't work out very well for me.
Okay.
So for certain use cases, it works well, but I think I can't wear that for 12, 14 hours a day.
I mean, real quickly here, what do you think about the price tag, $3.5 billion? These days, we're not blinking anymore with these kinds of numbers.
Well, I mean, look, it's a minority stake, and the fact that Ray-Ban is such a big brand and they get to work with the company, I don't think it's that big of a deal when they are spending, like I said, $5 billion a year on the top AI researchers they have just hired. So
Can you dig into that? Because I really want to know the salaries and the bonuses that they're offering these people. Of course, the Apple's lead AI person going over to Meta, that was the reporting earlier today.
Yeah, I mean, look, it's not an exaggeration. They have actually paid up, and that will result in almost $4 to $5 billion in incremental OPEX. So when they report earnings, that's the one line item that I'm focused on is what does it mean for their OPEX raise?
Can they mark that down? Is that like depreciation or something? That they
Or
could
maybe they
announce
a big layoff or restructuring. Who knows to offset that?
Today's job market is getting complicated. Mandeep Singh, Global Head of Technology Research at Bloomberg Intelligence. We thank you so much for joining us here on set. Coming up, we're going to take you to the closing bell with Jay Woods of Freedom Capital Markets. Stick with us for that. This is The Close on Bloomberg.
I think 2Q is going to be really important because it's going to be the first real, time that we actually see the effects of tariffs. But expectations are really low. 2Q earnings expectations have been revised down. I think a lot of corporate America will show that they're much more profitable than expected.
Abby Yoder kicking us off to the close just about 50 minutes ago. S&P 500 has basically been unchanged pretty much for the entire day. You're seeing a little bit more activity when it comes to small and mid caps, Janali, but right now, at least for today, not a market with a whole lot of conviction.
It's crazy. Underneath the surface, the churn is kind of wild. And the reason is you don't actually see the defensive trade as much as the tape on the index level looks like it would be otherwise defensive.
And I wonder if this is still maybe a little bit of trepidation about whatever's going on with tariff policy. I know a lot of people, they thought, okay, Trump would not follow through on this. I know he kicked the can down the road to August 1st from July 9th, but he kind of made clear in that cabinet meeting, at least if you take him at his word, that he's going forward with this, and August 1st, that's it.
Some have doubts, though. I'll point out Henrietta Trays as one of them, saying that this is likely to go well past August. And, of course, there are the sectoral tariffs as well, some of which hit today. And on the heels of that, you do actually have the dollar back up a little bit. That's probably some relief for the market. But the 10-year yield, I think it's worth watching, 4.4% once again.
And we should point out that the majority of the stocks in the S&P today are actually in the green, despite the index being unchanged on the day. That's because you have some big drags to the downside from Amazon, JP Morgan, Alphabet, and Netflix. Jay Woods joins us right now. He's Chief Global Strategist at Freedom Capital Markets, joining us here in Studio 2 to count us down to the close. All right, Jay, let's start first of all with whatever's been happening over the last couple of days with trade. And it's hard to wrap my head around it. We had a headline earlier today about copper, 50% copper tariff. And my first thought was, didn't we already have tariffs on copper? But I guess he had only threatened them before, and now he's kind of saying, but it gets to this idea, and I don't want to make light of it, but it gets to this idea that the market seems to be having trouble just even keeping up as to what's up, what's down, what's being imposed, what's not. And I do wonder if that actually makes a case for certain people in the market just to not pay attention to it at all.
We're starting to tune out that noise which is coming from Washington. We're up 25% from the lows, which started on Liberation Day when that big chart came out and scared us to death. Down 15%.
The most expensive poster board in history.
Yeah, it was very clever. Whoever did that, give them some credit. But since then, we've made it all back. We're at all-time highs. So for the president to now negotiate at all-time highs, he's got some wiggle room there. So kudos to him for negotiating in public, but the market is not reacting to it. Yes, we sold off after a tremendous run to all-time highs, but the retracement was 1.5%. That's kind of a yawner. And then if you look at the activity, we're talking tumbleweeds this week after the 4th of July holiday. When WD-40 is the earnings that we're focused on, and Delta, yes, I know Delta tomorrow as well. It's a kind of a breather, and we were worried about what would come out of Washington. Yes, we went back to some of the levels. In fact, Japan went from 24% to 25% and went up. So these numbers are a little wonky. We have now to August 1st, we think. I think we'll kick that can down the road, as Shanali said. But right now, I think this is just a breather after a nice run, and I think we're set up and poised to go much higher as we kick off earnings season next week.
You think this earnings season that is about to kick off is going to be good, or at least it's going to be better than expectations?
Oh, without a doubt. I mean, the bar is low, as your last guest had stated as we came into this segment. And, what we have now are technical levels, which we're just breaking out above, and room to follow through. So that worst kick to the curb is over. Now we're digesting these gains, and I think the setups are there. And then the broadening of this market is what has me really excited, and my horns sticking out of my head on the bullish camp, because we're seeing more participation, and it's the right leadership. It's not just industrials leading us higher. Financials are coming back. Well, they'll be on display next week. And technology. So this is the right leadership.
Glad you brought up technology. Let's talk about a popular trade. Let's talk about NVIDIA. It is now at $3.9 trillion. According to our producer, Terrell Holt, that would make it the first company to hit that valuation. It's so close. Was it you that was obsessed with the $4 trillion mark?
$4 trillion. I already printed out my hats.
Okay, yeah. So
I need a hat.
Yeah.
So does that not feel frothy to you?
Not for NVIDIA. No, not at all. NVIDIA has been a stock that has gone sideways for over 12 months. It's a heck of a range, but when that stock consolidates like it had and then broke out above that 150 mark, the runway is long and it's launching. To me, yes, 160, I think 160.39 is $4 trillion. Not sure about the cent mark, but just over 160. We'll hit that $4 trillion. It will be a headline, but it's just starting to take off. The CapEx spend was there. I can't wait for the earnings come August.
163.94.
163.94?
Yeah, someone else did the math.
Well, then, I trust the Bloomberg staff. All right.
We got a whole team of people behind this
My
wall
intern
here.
is fired
They
right
do
now
everything,
because I was
so.
told 160.39. But, yeah, boy, I'd like to be accurate. So thank you for that on-air accuracy. But it's going to get there. So the question is just when. But when you talk about the tech trade, that was lagging Broadcom. CrowdStrike broke out. Micron coming back to life.
Yeah.
So NVIDIA just joined the party, but that's the leader you want. And yes, $4 trillion is going to be a milestone. Microsoft will probably follow in weeks to come. That's at 3.5, if I'm not mistaken. So have the producer check me on that, please.
Yeah.
And this is the leadership we want. So when you talk about NVIDIA, yeah, that excites me. We get to $4 trillion, but I think this stock could be a $200 stock at the end of the year.
I feel the bullishness, but my question is, where are the best places to hide? What are the safe trades in this market when the Mag 7 as a group is not even up 1% on the year?
No,
I mean, Tesla helped that out a little bit.
Well,
but
Tesla is destroying everything, especially consumer discretionary, if you want to go there in a little bit. Yeah. But, yeah, each stock is a little different right now, and they're telling their own story. I like how Apple and Alphabet are set up and poised to go higher to rotate back into the other Mag 7 names that have been lagging. Apple, it's still above 200. That's positive. But Apple, to me, the story has changed until we can get that best next thing. But if it holds 200, technically, it's good, but it's still below the 200-day moving average. It's got room to go. So the Mag 7 trade, they're there. But where do you hide out? I don't think you want to hide. I think you want to participate on a broad-based platform. Where you want to go? The most beaten down sector, consumer discretionary, down over 2% year to date. Yes, Tesla's 4.3% of that. It would be up 2.6%. I did that math before I came in, so they can check me on that. But Tesla has been the one thing that's been holding it back, but it's still lagging. But when I look under the hood, okay, Amazon makes up 20% of it, and it's on its way to 240. But you look at Lowe's and Home Depot, they've stopped going down. They're starting to turn. The home builders, all of a sudden, they're gaining a little traction. Yes, that market is struggling, but to me, that's where you want to be. And then bookings. No one talks about bookings. 52-week high again today. This thing's a juggernaut.
All right, Jay Woods, always a pleasure. Chief Global Strategist at Freedom Capital Markets. As we get closer to those closing bells, you are seeing a bid in small cap discretionaries on this day. And as far as the S&P and the large cap names, you are getting a boost today from Tesla, from NVIDIA, from Chevron, and some of those big names. Unfortunately, that's being canceled out by a downdraft in some of the others.
Yeah, banks are down today, though, and yields are higher. We'll see where the trade goes.
A full breakdown of all of today's market action starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Shonali Bassick here to take you through that closing bell with the global simulcast. It has already started. There's Tim Stenovic in the radio booth, Emily Grafeo in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms. An unchanged day on the S&P 500, Tim Stenovic, but a little bit more activity in the small and mid-cap space.
Yeah, Emily's been talking about the Russell 2000 all day today. We are seeing some activity there. I think investors still have a lot of questions about tariff policy. I've been asking our guests throughout the day today, are these letters providing more clarity? And one after one, people are saying not necessarily.
You know, it's funny. I wanted to look at the Russell year to date, and the little bit of a bid you're getting today brings you to almost flat. Now, isn't that a fascinating stat?
Also in the commodity space, there has been some movement. Look at copper prices up over 9% right now. Of course, coming after that tariff news from Trump. potentially a 50% tariff on copper.
Yeah, and of course, the tariff news, we did see a big downdraft in stocks when we started to get some of those headlines. Some of that coming, of course, first from his social media site and then later at that cabinet meeting. And it really is just a reminder, Tim, of this idea that the tariff issue is far from resolved and still potentially poses a risk to the markets.
Yeah, I think that's what, the big question people have is, what does the August 1st deadline think? We speak to folks every day who basically say, well, he hasn't necessarily followed through on these tariff promises. And we just spoke to Chris Brigatti over at SWBC, and he was like, this is one he's not going to extend. August 1st, that is actually going to mean something.
And if you listen to his comments at that cabinet meeting, and I actually really encourage people to go back and listen to it, a lot of rambling, but in between that, he did make some very salient points about his philosophy on tariffs and trades, of course, hearkening back to President McKinley, and in his view, how that tariff situation, in his view, worked out. Let's take a look at the numbers across the board. Not a whole lot of action there with the S&P and NASDAQ. We're just going to call it unchanged. The S&P does have a red arrow, but only down about 4 points. The NASDAQ does have a green arrow, but only up about 6 points. The Dow Jones Industrial Average decidedly in the red, down more than 160 points or 0.4%. And the Russell 2000 decidedly in the green, up 14 points or 0.7%.
Still did have 269 stocks in the S&P 500 move higher today, whereas 231 moved lower.
Let's look at the sectors as well, because even though the sectors here show you a little bit of red on the screen, obviously it was enough to drag down the broader index here. You did have consumer staples, which was yesterday's gainer, and the relative safety trade in the market down more than 1% on the day. Utilities and financials also lower by almost 1% or more. Energy was your gainer. You had it up about 2.7% on the day. So very, very mixed trade, even though you had an index that showed roughly flat.
All right, let's get to some of the gainers today. I want to start with semiconductor stocks. I just went and chose the entire SOX, the Philadelphia Stock Exchange Semiconductor Index. We saw shares of semis rise today. The group outperformed as analysts expressed optimism about the group's prospects. Mizuho Securities raised its price targets on a number of chip makers. KeyBank Capital Markets also raised targets on a number of chip makers. If you look at the SOX right now, of the 30 stocks in there, 27 of them were higher, 3 of them were lower. Intel up 7.2%, Global Foundries up 7%. On the downside, Broadcom did fall 0.9%. Also, Emily mentioned copper stocks. I want to go with Freeport-McMoRan. The shares jumped as much as 8.8% earlier in the session. They moved lower after that Trump announcement at the cabinet meeting to finish the day finish the day higher rather by over 2%. This after President Trump said he would impose 50% tariffs on copper.
Did you know there are people who collect like old pennies, the ones that actually still had copper in them because they were anticipating a big jump in copper prices?
It's funny you say that. I did not know that.
Okay.
But I did learn something about coins today, and I'm glad you brought this up.
What's that?
Charlie Pellet told me that in the U.S., we do not have the actual number of cents that a coin is worth on that coin. Like a dime doesn't say 10.
That blows my mind.
A quarter doesn't say 25.
And I don't know why, but it blows my mind.
Hey, you know what? We're a little different.
Yeah,
we're a little different.
We are America.
We are. Hey, I want to end with a stock that really had some serious outperformance today. ProKidney shares soared the most ever. Look at this, up more than 500%. Isn't this wild?
I've never heard of this.
It's a drug developer. It gave top-line results from a mid-stage trial of its experimental therapy to treat kidney disease. The company reported statistically significant and clinically meaningful positive top-line results from a full Group 1 modified intent-to-treat population of a Phase 2 trial. And it was good news, and investors loved it. Look at this, up more than 500%, ticker PROK.
That is incredible, Tim. Let's go to the decliners, though. FICO, Fair Isaac, but known colloquially as FICO, fell 9% today after federal regulators said government-sponsored mortgage entities Fannie Mae and Freddie Mac will be able to use an additional firm when determining borrowers' creditworthiness. So they were using FICO. Now Fannie and Freddie will allow lenders to use Vantage 4.0, their credit score, to increase competition in the credit score ecosystem, at least according to what the regulators had to say. Vantage is a private company, so we couldn't see how the shares performed, but we did know that this was weighing heavily on FICO. I'm also watching shares of Hershey, down 3%, closing the day. Yeah, down about 3.2% after some management changes. The snack food company named Wendy's CEO Kirk Tanner as its CEO, replacing Michelle Buck. This is going to be effective August 18th. The reason why the street was so negative on this is that Hershey announced back in January that Buck would be retiring in June of 2026. And so the timing of the appointment is somewhat surprising, and the transition was almost a year early. So shareholders didn't like that. So we saw that stock falling. And then finally, First Solar. It's been a wild ride here for the solar stocks. Today we saw First Solar down, closing the day about 6.5% lower after President Donald Trump called for new rules that would restrict access to tax incentives for solar and wind projects that were already pared back in that big, beautiful bill.
Some of the big individual movers there when we talk about the aggregate market and the lack of movement that we saw in the S&P 500. I'll one-up you and take a look at the bond market. Treasuries basically doing nothing today. Yields are higher across the board, but only by about 1 to 2 basis points as you pick your point on the curve here. So a little bit of stasis. And we should point out most of the activity in the Treasury market actually came during the European hours here. So it's basically been stasis for the last couple of hours here on the U.S. side. Tim.
I got a little bit of a New York-centric story here, but there's a little technology in it as well.
Does it involve rats?
It doesn't.
No.
No, New York City is one of the biggest ride-hailing markets in the United States. And now, if you're in New York, you might start seeing Google's Waymo vehicles driving around because they're starting to test them here.
Oh, yeah?
But they have people behind the wheel. They're just gathering data.
Yeah.
The company sent out a social media post. They said, be sure to give us a wave and snap a pic if you see us in the city.
That's what they said? Okay.
And you're not just giving the Waymo a wave. You're giving the person sitting in the driver's seat a wave as well.
Do they know we don't give waves here?
Yeah, I was about to say, I mean, they're going to get a wave, but I don't think it's the wave that they're looking for.
Exactly.
So as somebody that drives daily in New York City, the problem is actually not the cars, right? Like, there's so many people.
It's the drivers?
And the people, right?
Okay.
I mean, jaywalking is a real thing in New York City. So it's a really interesting city to be trying this in. There are a lot of bikers, as you say, too. So again, I drive every morning in the city.
Can't trust those guys.
It's a lot to handle for a driverless car out there.
Yeah, I'm actually looking forward to this. I think anything possibly to improve traffic in this city, I'm definitely all for. I'm also keeping an eye on gold, Timothy. We were just talking about copper. But did you know that Tether, this is the big stablecoin issuer, basically one of the two big publicly traded ones out there, apparently they've been hoarding $8 billion worth of gold in a secret Swiss vault. And I'm glad it's secret, because if it was public, that would be trouble. But it really gets to this idea. This story really captured my attention because there's been all this talk about stable coins, of course, with Circle recently going public. And the idea that you can't have a stable coin unless it's, actually backed by real assets, presumably dollars, or maybe in this case, something that can be converted into dollars like gold.
But doesn't this answer a lot of questions about what was backing Tether or what is backing Tether?
Yes.
Hasn't that been a big concern?
It's been a huge concern for a while. And I think it's also when you look up the run-up that we've seen in gold prices, remember there was a big period where it just didn't make sense, economic sense, as to why you were seeing such a surge. And maybe this helps to start explain. And it might not just be Tether. There might be a lot of other folks out there that have been doing the same thing.
What happens then to the price or how much that stablecoin is worth if the price of whatever asset you have underlying it declines?
That's a good question. I don't know. Don't you host a crypto show?
I do. I was asking Shonali because she hosted with me.
Right. We've seen depegging, but just another fun fact to leave in your minds, guys. Tether itself was the 7th largest buyer of U.S. Treasuries last year, even ahead of most major countries. And so safety, perhaps in gold as well as treasuries.
I have a question, though. If I buy a stable coin, does it say on the coin how much it's worth?
There's no stable coin. Oh, gosh.
There it is.
That's a joke.
Tremaine always brings it back.
That was good.
All right, we're going to have to leave it there. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll all be back tomorrow, same time, same place.
And our coverage continues here on Bloomberg Television with a deeper dive into the latest developments on the tariff and trade front. A conversation up ahead about some of the non-tariff trade barriers. Sarah Hsu, Clinical Associate Professor of Supply Chain Management at the University of Tennessee, Knoxville, joins us after the break. This is The Close on Bloomberg.
Connecting the dot between what's at stake and what is possible.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
And welcome back to The Close. I'm Shonali Basak.
And I'm Romaine Bostic. And Shonali, we had that big sell-off yesterday. It looked like we were going to get a rebound today, but ultimately what we got was a bit of a nothing burger. Take a look at the chart behind me, and you can see the S&P 500. You might as well call it unchanged, a red arrow to the downside, but only less than 0.1%. And we should point out that the trading range today was very tight, peak to trough. We're talking fewer than 30 points from peak to trough here. That's one of the tightest trading ranges that we've seen all year long. Also, activity in the Treasury market somewhat subdued there as well, though we did see a lot more activity in the overnight session coming out of Europe. But once U.S. investors took charge, they basically said not a whole lot to do here on the day. There was a ton of activity, though, in the commodity space. Crude oil took a big jump up, largely on the new report here about the potential for an increase in supply coming out of the U.S. and a huge surge in copper futures. This is COMEX, the ones that trade here in New York, $5.49 a pound. That's a record high, Scarlett. Excuse me, Shonali.
It's okay. We're like sisters. I'll take it. Well, a few equity movers we're watching today here, Romaine. Some of the day's biggest movers. SoFi was an interesting one, up about 3.7%. It's like the fourth day of gains, so pretty interesting moves over the longer term. Now, the tax bill is set to help companies that offer private student loans, which is still a big business for SoFi, although it has been diversifying. Also watching Intel was up more than 7% today. It was soaring. The company, though, is planning to cut 500 positions as part of a layoff plan that should help them reduce operating expenses. Also keeping an eye on Amazon because it was one of the big tech giants that had been declining today to the tune of 1.8%. On the first day of Prime Day, sales fell almost 14% in the first 4 hours, and that comes out of concerns that tariff pressures are offsetting discounts. So perhaps things were much cheaper last year on a day like Prime Day, or one of 4 days, than it was this year around.
And that brings us to our top story, Shonali, for this hour, and that really is a closer look at U.S. trade policy and the impact on global markets. The parlor game among investors for weeks has been a bet on whether Trump's bark would be worse than his bite. For now, he's still barking, but with no meaningful trade deals ahead of the July 9th deadline, now extended to August 1st, the president tried to make clear today that he is indeed ready to bite. Threats to a wide range of countries to get them to the table, combined with separate threats of 50% tariffs on all imported copper and 200% on pharmaceutical drugs. It signals a hardened stance, a stance that is not just confined to tariffs specifically. Non-tariff trade restrictions also vexing markets, including in the chip sector, as the Trump administration just a few days ago said it would stick by plans to restrict exports of AI chips from the likes of NVIDIA. In fact, South Korea's Samsung Electronics overnight warned investors of a sharper than anticipated 56% plummet in operating income for the most recent quarter, which it blamed on inventory write-downs following U.S. curbs on Chinese-bound AI chips. Joining us right now to talk a little bit more about this is Sarah Hsu. She's Clinical Associate Professor of Supply Chain Management at the University of Tennessee at Knoxville. All right, Sarah, there's so much now batting around the chip sector, from actual tariffs to some of these sort of non-tariff measures. And I am curious as to whether you see an industry that is actually prepared for the idea that the U.S. will indeed follow through on all of these threats.
I think it's going to be it's really going to depend on which specific industry has to deal with these threats. We're looking at potential restrictions on semiconductors themselves, but this would also potentially affect other elements of the supply chain, both upstream and downstream. So for things like consumer electronics goods, that could also increase the prices of those because semiconductors are critical elements of those. For the semiconductor industry, I think it's going to impose additional cost and potentially reduce profits.
Well, this is what I'm curious about, too. And we've had you on this program a lot over the last couple of years to talk about supply chain issues, obviously first more related to the first trade war, then COVID, and a lot of things in between. In the semiconductor space, I mean, I don't know, maybe this is an overstatement, but it is truly global in the sense of how these things are made, where they're sold, and how they're bought. And I am curious, is there a realistic way of kind of decoupling from a global supply chain for semiconductors to something that is sort of confined within the borders of, one or two nations?
Absolutely not. And that is a really critical point. The issue is that, with the tariff, the Section 232 investigation in particular, that was initiated by President Trump in April, looking at potential 25% tariffs on semiconductors, we were also potentially examining imposing tariffs on the upstream suppliers. So things like wafers or chemicals or equipment. That means that for companies who are setting up shop in the U.S., like TSMC, Intel, Micron are both expanding in the U.S., they would face increased costs from the get-go. And in addition to that, I know Section 232 has also been looking at potential tariffs on the downstream. So looking at potential increase in the prices of consumer electronics as well. So really, when you kind of attack the whole supply chain, when you increase prices across the whole supply chain, at least for a large chunk of it, that's hard on consumers and on businesses alike.
Sarah, what does the supply chain look like in terms of, you mentioned this could get worse for consumer electronics. I'm very sorry to say, I'm one of those people with a very broken iPhone. It's very embarrassing. I have been waiting about 6 months to get a new one, and I just haven't gotten around to it yet. And, I wake up every week and I'm like, well, do I wish I bought it 2 months ago, right? But it takes a long time to get there, doesn't it? So when do consumers actually start feeling the pinch?
It's really hard to say when these tariffs or non-tariff barriers are going to take effect. Section 232 investigation is ongoing, I believe, until the end of the year. So far, semiconductors have been generally exempted from the reciprocal tariffs. If they are not, and if the, like I mentioned, the upstream and downstream with the materials used to make semiconductors and the electronics, if those are not exempted, then we're going to feel the pain even sooner as these reciprocal tariffs come into effect, potentially August 1st. And so, that is, it's also going to depend on the product, to what extent they use items that.
और गाइस, ये नेचुरल गैस में देखो, ये लेवल मल्टीपल टाइम टेस्ट हो गया, एक थर्ड टाइम आया है यहाँ पर, फिर से लगाया है. थोड़ी क्वांटिटी कम ही रखना है इसमें. या तो एक ही बार में चला जाए, आधे रास्ते से रिटर्न हो जा रहा है. ठीक है, ये थर्ड टाइम है इस लेवल पे, सेम लेवल पे. नीचे वाले लेवल पे होल्ड ही नहीं करेगा अगर यहाँ पर होल्ड नहीं करता है. एक बार आपका मई में आया था, ठीक है, फर्स्ट टाइम मई में आया था, उसके बाद लास्ट टाइम जो परसों का लो बनाया था, टच तो नहीं किया 7 जुलाई को, तो ये सेकंड लास्ट टाइम जो आया है, दिस अ थर्ड ही कंसीडर करेंगे. वैसे ये कैंडल भी ओपन इक्वल टू हाई बनी थी, बट स्टिल ओपन इक्वल टू हाई डिस्ट्रॉय हो गया है, तो नॉर्मल कैंडल ही है. सो स्मॉल क्वांटिटी ही रखियो. इनफ है, अगर आता है तो इससे बड़ा ऐसे मत लेना भाई. क्रूड ऑयल में एटलीस्ट हाफ प्रॉफिट बुक करके ट्रेल करना, ठीक है. ये भी रुक रहा है काफी टाइम से. होगा तो रुक जाएगा, नहीं तो और लास्ट टाइम लोअर हाई बनाया है तो बस सेलर बायर बहुत कम है। इसका क्या है जरा देखें। क्रूड ऑयल स्टक जैसा क्या हो गया? क्रूड ऑयल का चार्ट ही नहीं चल रहा है। ओके नाउ इट इज स्टार्ट। कैंडल क्लोज हुई थी, काफी देर तक रुका रह गया। अगेन कैंडल ओपन। यहाँ पर एक्चुअली एक रीटेस्ट जोन जैसा कुछ एक है तो उस वजह से रुक रहा है क्रूड, अदरवाइज तो अभी तक निकल जाता। नीचे वाला लेवल भी कई बार टेस्ट हो गया तो चांसेस कम है वहाँ पर होल्ड करेगा। ओके, अब सीधा यूएस मार्केट ही ओपन होगा और कोई डेटा तो नहीं है। सीधा क्रूड ऑयल की इन्वेंट्री यूएस मार्केट की ओपनिंग के बाद। My voice is low, almost inaudible. Now it is clear. अब सही आ रही है? जैसा मैंने बताया, नेचुरल गैस का ये लेवल थर्ड टाइम हम कंसिडर कर सकते हैं। पहली बार एक बार मई में आया था यहाँ पर प्राइस, वहाँ से एक बार बाइंग आ गई थी, फिर रिसेंटली एक लो बनाने की कोशिश करी थी, एग्जैक्टली आया नहीं 7 जुलाई को, तो उसको मैं कंसिडर कर नहीं रहा हूँ अभी। थोड़ी देर पहले बाइंग सेकंड, दिस अ थर्ड टाइम, तो थोड़ी क्वांटिटी कम रखना। लास्ट टाइम जो है बाइंग आई है, लोअर हाई क्रिएट किया है, तो बायर अब कितने हैं यहाँ पर कह नहीं सकते। बाकी अगर ये एसएल जाता है तो फिर नीचे नेक्स्ट सपोर्ट 272 के अराउंड है। बाकी क्रूड ऑयल स्टक हो गया वहीं पे, हमें भी शायद इन्वेंट्री का वेट हो रहा है। थोड़ा सा नीचे अगर आ जाए 5830 के अराउंड, 830 840 के अराउंड, यहाँ पर एक बाइंग, नहीं तो फिर एक नीचे भी है। ये लेवल तो परसों कल काफ़ी टेस्ट हुआ है। और थोड़ी क्वांटिटी कम ही रखना नेचुरल गैस के इस बाइंग ट्रेड में। क्रूड ऑयल भी आ गया फाइनली नीचे। क्रूड का भी हो गया टारगेट डन। बोथ चार्ट स्टक, नहीं तो चार्ट स्टक हो गया क्या? मेरी स्क्रीन पे तो चल रहे हैं, लेट मी चेक। नाउ बोथ चार्ट विजिबल। अब दिख रहे हैं दोनों चार्ट या अभी भी स्टक हैं? रहना अब ठीक है। कभी कभी शायद वो स्टक हो जाते हैं। देखो नेचुरल गैस का ये ट्रेड थोड़ा ध्यान रखना है, थर्ड टाइम आया है जैसा मैंने बताया। ब्रेक भी हो सकता है तो रिस्क ज़्यादा नहीं लेना। इसके नीचे वाले सपोर्ट से देख लेंगे, ज़्यादा क्वांटिटी इसमें लेना मत, ली हुई है तो। बाकी क्रूड ऑयल का हो गया टारगेट, इसमें निकल सकते हैं। इसमें एक बाइंग का ट्रेड इसमें भी प्लान रहेगा। कैंडल ओपन इक्वल टू हाई नहीं बननी चाहिए, बस ओपन इक्वल टू हाई पे बाई नहीं करेंगे। ये बाकी इन्वेंट्री भी है क्रूड की आज। बाकी 7 PM पे अभी यूएस मार्केट ही ओपन हो जाएगा। अभी आने तो नीचे आया नहीं है वेट ठीक है अभी क्रूड में आया नहीं है एग्जैक्टली ओके नेचुरल गैस का एसएल जा चुका है निकल जाना होल्ड मत करना लगता है लोअर सर्किट ही लगा देगा आज कल से रुक ही नहीं रहा पुल बैक ना के बराबर लगता है नेचुरल गैस का फ्री फॉल ही हो जाएगा आज, फेक ब्रेकडाउन ना दे बस। 6:30 या डन। कैंडल भी दोनों जगह ओपन इक्वल टू हाई बनी है, वेट करेंगे। ओपन इक्वल टू हाई पे मत लेना, फेक ब्रेकडाउन हुआ तो प्रॉब्लम हो जाएगी नहीं तो। 3%, 4% डाउन है।
This is an iHeart podcast.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated.
नहीं, अभी तो ऐसी कोई न्यूज़ तो नहीं है। इन्वेंट्री है, अभी 7 बजे यूएस मार्केट ओपन होगा, 8 बजे उसके बाद इन्वेंट्री आएगी। उसके अलावा तो कोई न्यूज़ ऐसी दिख नहीं रही है फिलहाल के लिए। बाकी वो ट्रम्प ने टैरिफ लगाए थे, बट वो मेनली कॉपर के लिए ही हैं। कॉपर मार्केट में देखोगे ऑलरेडी वो फॉल किया था उस वजह से 50% टैरिफ, तो उसकी वजह से कॉपर का जो प्राइस है वो काफ़ी ज़्यादा इंक्रीज हो गया था। क्रूड ऑयल के रिगार्डिंग कोई स्पेसिफिक न्यूज़ तो नहीं है। वेयर इज़ द कॉपर? ठीक है, एमसीएक्स में भी देखोगे तो मॉर्निंग पे गिरा, उसके बाद साइडवेज। नेचुरल गैस भी नहीं रुक रहा है, अभी कंटिन्यूसली फॉल करते जा रहा है। फेक ब्रेकडाउन ना हो बस। Adani units in talks with MUFG for $250 million offshore loans. तो ऐसे स्पेसिफिक कोई न्यूज़ तो नहीं दिख रही क्रूड के रिगार्डिंग। बाकी रेजिस्टेंस था, सेलिंग आ रही है, लेट्स सी। बाइंग कर नहीं सकते, लास्ट कैंडल ओपन इक्वल टू हाई थी सपोर्ट पे, मैंने पहले ही बताया ओपन इक्वल टू हाई पे डायरेक्टली बाय नहीं करते। ये भी ओपन इक्वल टू हाई बनी थी और ये भी ओपन इक्वल टू हाई बनी थी, और वो सपोर्ट पर ही पहली बार कैंडल आया है, तो वी कांट बाय ऑन ओपन इक्वल टू हाई डायरेक्टली। Greek ship attacked in Red Sea sinks, 4 dead, 7 rescues, 14 missing. ग्रीक शिप अटैक्स, किसने अटैक कर दिया इसको रेड सी पे? हुतीज नहीं किया है क्या? Rescuers pulled 7 crew members alive from the Red Sea on Wednesday and were searching 14 still. फिलहाल और कोई न्यूज़ नहीं है इसके अलावा, देयर इज नो न्यूज़। लाइक भी करते रहो, 7 PM होने वाला है, यूएस मार्केट इज गोइंग टू ओपन। ओपन इक्वल टू नहीं, ओपन इक्वल टू लो पे देखो बाइंग और ओपन इक्वल टू हाई पे सेल, सॉरी ओपन इक्वल टू हाई पे बाई और ओपन इक्वल टू लो पे सेल इसलिए नहीं करते क्योंकि वो कैंडल बन रही है ओपन इक्वल टू लो इन द सेंस ऑफ किसी बड़े प्लेयर ने वहाँ पर इतनी बड़ी क्वांटिटी में बाई किया हुआ या फिर सेल किया हुआ है कि कैंडल का लो या फिर हाई और क्रिएट नहीं हुआ। मान लो ओपन इक्वल टू हाई है मतलब ओपन होते ही सेलिंग है, तो ओपन होते ही सेलिंग किसी कैंडल पे हो रही है तो मैं कितनी क्वांटिटी बाई कर लूँ आप कितनी क्वांटिटी बाई कर लो, वो कैंडल ओपन इक्वल टू हाई में कन्वर्ट नहीं हो सकती। वो तभी हो सकती है जब कोई बहुत बड़ा ऑर्डर लगे वहाँ पर और तब वो कैंडल बनाई जाए। सो दैट्स वाई अगर कोई सपोर्ट है ओपन इक्वल टू हाई बन रही है मतलब कोई चाह रहा है कि वहाँ पर ब्रेक डाउन हो या फिर फेक ब्रेक डाउन हो, दोनों चीज़ हो सकते हैं, तो वी कांट बाई डायरेक्टली, दैट्स वाई। यहाँ पर भी देखोगे नेचुरल गैस में ये कैंडल भी ओपन इक्वल टू हाई ही थी, फिर इसने अपना ओपन इक्वल टू हाई वैसे ब्रेक कर दिया था बट होल्ड नहीं कर पाई। तो ओपन इक्वल टू हाई पे नहीं। बाकी अब इन्वेंट्री भी है आज तो मोस्ट प्रोबेबली वहाँ तो होल्ड करेगा ही। अब इसको नीचे ही आना है तो यहाँ से देखते हैं। is open equal to high, open equal to low candle or worse candle at buying or selling. ठीक है तो नेक्स्ट यहाँ से बाइंग है, ये टारगेट रहेगा क्योंकि अब ये सपोर्ट ब्रेक हो रहा है, दैट सपोर्ट देन एक्ट लाइक एज अ रेजिस्टेंस। यूएस मार्केट भी ओपन होने वाला है, ध्यान रखना ओपन इक्वल टू लो ना बने। लेट्स सी, आने दो। लेवल पे आ जाए तो बेस्ट रहेगा। ठीक है, यूएस मार्केट ओपन, ये तो सपोर्ट हो गया भाई, ब्रेक ऑलरेडी। नीचे आके बाइंग आए या फिर अब रीटेस्ट भी बाइंग और सेलिंग हो सकती है। थोड़ा नीचे ही आया अभी, ब्रेकडाउन। इन्वेंट्री का फोरकास्ट तो बुलिश ही है, जितना फोरकास्ट जितना किया हुआ है उससे। लास्ट टाइम जितनी आई थी उससे कम एक्सपेक्ट कर रहे हैं, तो बुलिश ही है ओवरऑल। कोई न्यूज़ फिलहाल मुझे नहीं दिख रही है, सिर्फ इन्वेंट्री है 8 बजे, यूएस मार्केट ओपन हो चुका है। बाकी अब इन्वेंट्री पे डिपेंड करेगा सब कुछ। यहाँ पर एक बाइंग एक्सपेक्ट तो है, बीच का सपोर्ट तो ब्रेक हो गया है, खैर अब वो काम का नहीं है। वी कैन एक्सपेक्ट बाइंग फ्रॉम हेयर। ज़्यादा बड़ा ऐसा नहीं रखते हैं, 25 पॉइंट काफ़ी रहेंगे फ्यूचर में। बाकी अब ऑल डिपेंड अपॉन द इन्वेंट्री। ओपन इक्वल टू हाई ना बन जाए फिर से कैंडल। एक बाइंग का लेवल है, यहाँ से एक बाइंग प्लान रहेगी, आता है नीचे तो। हो गई यूएस मार्केट की कैंडल तो हो गई क्लोज, थोड़ा सा नीचे और आता है तो देखते हैं। क्रूड ऑयल में सिर्फ इन्वेंट्री बची है और कुछ तो है नहीं।
this is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The trading day is underway on this Wednesday morning with stocks adding to record territory despite new tariff threats. That's the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by nearly 0.4%, up more than 20 points. The Dow Jones Industrial Average is 0.4% higher. That's a gain of about 180 points. And the Nasdaq Composites leading the way up 0.5%, up more than 100 points. The 10-year Treasury yield is down about a basis point to 4.38%. We'll get back to what's driving the market in a moment, but we have breaking news in the Trump administration's ongoing fight with Harvard University. The Homeland Security Department has sent formal subpoenas for foreign students' information, and the Education Department says the university is in violation of Title VI and anti-discrimination laws and may not meet accreditation standards. In a statement, Education Secretary Linda McMahon said, quote, by allowing anti-Semitic harassment and discrimination to persist unchecked on its campus, Harvard University has failed in its obligation to students, educators, and American taxpayers, end quote. There's no immediate response to this from Harvard. Back to what's driving markets, investors are waiting for the next shoes to drop in President Trump's trade wars. More tariff letters are expected this morning. Bloomberg's Tyler Kendall reports from Washington on what to expect.
We know that those countries that President Trump has grown frustrated with were prioritized for letters, like how we saw Japan and South Korea get letters the other day. Perhaps that could indicate that some of those other trading partners, like India, for example, that President Trump keeps highlighting could be in the mix. But he did give us at least one really firm answer, which is that the European Union could be getting a letter in the coming days.
Bloomberg's Tyler Kendall reports the EU is still hoping for a framework agreement this week, but President Trump is frustrated about its taxes and fines on U.S. tech. We're also watching metals markets after the president threatened a 50% tariff on copper imports. Bloomberg's Martin Ritchie has that.
The market was really pricing in, and analysts were broadly expecting a 25% tariff. So this is significantly higher than expected, and it's really got people a little bit on the back foot in terms of scrambling to understand what's going to happen next.
Bloomberg's Martin Ritchie reports the premium on U.S. copper jumped yesterday to a record 25%. Right now, copper in the U.S. is trading lower by about 1.8%. Apple is moving on new comments from White House trade counselor Peter Navarro. He told Fox Business the iPhone maker thinks it's too big to tariff. The White House has been pressuring Apple to move production from China and India to the U.S. At the open, Apple shares are little changed to the upside. There's more deadly flooding in the southwest. The mountain village of Ruidoso, New Mexico says a man, a 7-year-old boy, and a 4-year-old girl were killed in monsoon rain so intense they swept their house away. Town spokeswoman Carrie Gladden says the rains surged the Rio Ruidoso nearly 19 feet in minutes.
The warnings are only as good as how you get them out. And so, you know, if as a community, when those of us that the warnings come to, if we don't push them out in a timely manner, that's when people's lives are put at risk.
Carrie Gladden in Ruidoso, New Mexico. Meantime, the search effort continues in the aftermath of the flash floods in Texas Hill Country. Governor Greg Abbott says at least 109 people are confirmed dead statewide. At least 161 may still be missing in hardest-hit Kerr County alone. Russia launched its heaviest drone and missile attack yet on Ukraine overnight. About 730 drones, including Iranian Shahed-style strike drones and about a dozen ballistic and cruise missiles. The onslaught came a day after President Trump expressed more frustration with Vladimir Putin and confirmed he's sending more defensive weapons to Kiev. Back to the market, we're watching shares of Verona Pharma traded in the U.S. They are higher by more than 20% at the open. Merck is buying the British respiratory drug maker for $10 billion before the patents on its own Keytruda treatment run out in the next few years. Starbucks shares are higher by 2% on word from people familiar that the coffee giant's fielding offers from prospective investors in its China business. Bloomberg's Kriti Gupta has that.
Starbucks has been trying to really win over the Asian market broadly. It hasn't really been able to do it. Coffee is not as easy of a sell in a tea-dominated culture. Starbucks has struggled with that. You've seen it in their sales. You've seen it in their exposure. And that is showing up today. So the idea of it getting interest from another party is a good thing.
That's Bloomberg's Kriti Gupta reporting. And Elon Musk's artificial intelligence company xAI says it will take down inappropriate posts from its Grok chatbot. Last week, Musk said his alternative to Google Gemini and ChatGPT had improved significantly. Since then, Grok has posted anti-Semitic tropes and appeared to praise Adolf Hitler. That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
Shares of banks across the board are gaining.
And analysis on the companies making news on Wall Street.
NVIDIA, once again, the top dog.
Tesla's really taking a hit this morning.
Listen to the Stock Movers Report from Bloomberg.
Wind and solar stocks on the move.
It's your short audio report on the day's winners and losers in the stock market.
The biggest one-day decline since 2010.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast. This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The trading day is underway on this Wednesday morning with stocks adding to record territory despite new tariff threats. That's the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by nearly 0.4%, up more than 20 points. The Dow Jones Industrial Average is 0.4% higher. That's a gain of about 180 points. And the NASDAQ Composites leading the way up 0.5%, up more than 100 points. The 10-year Treasury yield is down about a basis point to 4.38%. We'll get back to what's driving the market in a moment, but we have breaking news in the Trump administration's ongoing fight with Harvard University. The Homeland Security Department has sent formal subpoenas for foreign students' information, and the Education Department says the university is in violation of Title VI and anti-discrimination laws and may not meet accreditation standards. In a statement, Education Secretary Linda McMahon said, quote, by allowing anti-Semitic harassment and discrimination to persist unchecked on its campus, Harvard University has failed in its obligation to students, educators, and American taxpayers, end quote. There's no immediate response to this from Harvard. Back to what's driving markets. Investors are waiting for the next shoes to drop in President Trump's trade wars. More tariff letters are expected this morning. Bloomberg's Tyler Kendall reports from Washington on what to expect.
We know that those countries that President Trump has grown frustrated with were prioritized for letters, like how we saw Japan and South Korea get letters the other day. Perhaps that could indicate that some of those other trading partners, like India, for example, that President Trump keeps highlighting could be in the mix. But he did give us at least one really firm answer, which is that the European Union could be getting a letter in the coming days.
Bloomberg's Tyler Kendall reports the EU is still hoping for a framework agreement this week, but President Trump is frustrated about its taxes and fines on U.S. tech. We're also watching metals markets after the president threatened a 50% tariff on copper imports. Bloomberg's Martin Ritchie has that.
The market was really pricing in, and analysts were broadly expecting a 25% tariff. So this is significantly higher than expected, and it's really got people a little bit on the back foot in terms of scrambling to understand what's going to happen next.
Bloomberg's Martin Ritchie reports the premium on U.S. copper jumped yesterday to a record 25%. Right now, copper in the U.S. is trading lower by about 1.8%. Apple is moving on new comments from White House Trade Counselor Peter Navarro. He told Fox Business the iPhone maker thinks it's too big to tariff. The White House has been pressuring Apple to move production from China and India to the U.S. At the open, Apple shares are little changed to the upside. There's more deadly flooding in the southwest. The mountain village of Ruidoso, New Mexico says a man, a 7-year-old boy, and a 4-year-old girl were killed in monsoon rain so intense they swept their house away. Town spokeswoman Carrie Gladden says the rains surged the Rio Ruidoso nearly 19 feet in minutes.
The warnings are only as good as how you get them out. And so, you know, if as a community, when those of us that the warnings come to, if we don't push them out in a timely manner, that's when people's lives are put at risk.
Carrie Gladden in Ruidoso, New Mexico. Meantime, the search effort continues in the aftermath of the flash floods in Texas Hill Country. Governor Greg Abbott says at least 109 people are confirmed dead statewide. At least 161 may still be missing in hardest-hit Kerr County alone. Russia launched its heaviest drone and missile attack yet on Ukraine overnight. About 730 drones, including Iranian Shahed-style strike drones and about a dozen ballistic and cruise missiles. The onslaught came a day after President Trump expressed more frustration with Vladimir Putin and confirmed he's sending more defensive weapons to Kiev. Back to the market, we're watching shares of Verona Pharma traded in the U.S. They are higher by more than 20% at the open. Merck is buying the British respiratory drug maker for $10 billion before the patents on its own Keytruda treatment run out in the next few years. Starbucks shares are higher by 2% on word from people familiar that the coffee giant's fielding offers from prospective investors in its China business. Bloomberg's Kriti Gupta has that.
Starbucks has been trying to really win over the Asian market broadly. It hasn't really been able to do it. Coffee is not as easy of a sell in a tea-dominated culture. Starbucks has struggled with that. You've seen it in their sales. You've seen it in their exposure. And that is showing up today. So the idea of it getting interest from another party is a good thing.
That's Bloomberg's Kriti Gupta reporting. And Elon Musk's artificial intelligence company xAI says it will take down inappropriate posts from its Grok chatbot. Last week, Musk said his alternative to Google Gemini and ChatGPT had improved significantly. Since then, Grok has posted anti-Semitic tropes and appeared to praise Adolf Hitler. That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
Shares of banks across the border gaining.
And analysis on the companies making news on Wall Street.
NVIDIA, once again, the top dog.
Tesla's really taking a hit this morning.
Listen to the Stock Movers Report from Bloomberg.
Wind and solar stocks on the move.
It's your short audio report on the day's winners and losers in the stock market.
The biggest one-day decline since 2010.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
तो गाइस क्रूड ऑयल की इन्वेंट्री देखोगे, इन्वेंट्री तो आ गई है, पॉजिटिव ही है क्रूड ऑयल के प्राइस के लिए। 3 इन्वेंट्री आती है, सिर्फ एक पर्टिकुलर इन्वेंट्री को मत देखना। एक क्रूड ऑयल की इन्वेंट्री आती है, उसके अलावा 2 इन्वेंट्री और आती हैं, गैसोलीन की और ईआई का डेटा। तो तीनों का जो कंपोजिट है, 2 इन्वेंट्री पॉजिटिव है, एक नेगेटिव है। तो ओवरऑल हम कह सकते हैं इन्वेंट्री इज पॉजिटिव फॉर क्रूड ऑयल प्राइस। क्रूड ऑयल के लिए इन्वेंट्री पॉजिटिव ही है। ठीक है, मैंने टेलीग्राम पे बाकी अपडेट तो कर ही दिया है। लेट्स सी कितना मूव करता है अभी। और ये इन्वेंट्री इज पॉजिटिव फॉर क्रूड ऑयल प्राइस।
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination?
We know we've pissed you off for a few years now. We're gonna ease off, partly because the talent we're getting from you actually isn't as good as we want it to be. Actually, it would do us better, it would serve us better if you train them up for just a little bit longer, maybe 3, 4, 5 years before we poach them, just so that you know they've learned all the skills that they need. Because a lot of the young folk that they were getting into these PE firms just weren't at the level that they thought they were at, because they were hiring earlier and earlier and earlier, and these people didn't have the experience, hadn't proven themselves and got those skills that they really needed at PE firms.
Todd, awesome story. Instantly became the most read story on the Bloomberg terminal and has been there ever since in the #1 slot. Of course, everybody wants to read about this. Todd Gillespie covers Goldman Sachs and the banks for us. I want to get back to that breaking news now that the CEO of Twitter, now known as X, Linda Yaccarino, will be stepping down from the company after just 2 years. She said it in a tweet, doesn't give a reason. We bring in Bloomberg's Max Chafkin, who covers all things X and Elon Musk for us. Why do you think she's leaving?
Well, if you've been following the news lately, there have been quite a few reasons, I think, that have pushed Linda Yaccarino away. I should say, first of all, 2 years is a long time in Elon Musk's orbit, be in the role she was in, kind of serving as a buffer between Elon Musk and the world of advertising. That's going to be a very difficult situation for anybody. I think most people did not expect her to last anywhere near this long. So in that sense, it's a really impressive run. And I think in certain ways, she's done a lot, right? Like they managed to, it was a very chaotic couple of years or a couple of months at the beginning of her tenure at Twitter, kind of righted the ship. The problem is you have Elon Musk sort of relentlessly, changing things up in ways that I think have been super unhelpful. Of course, and you'll remember this well, bringing back all these far-right influencers, that's the kind of thing that advertisers don't like. And just in the last couple of days, we've seen this new version of Grok that is sort of just spouting anti-Semitic, cliches and praising Hitler and so on. And if there's one thing big advertisers don't like, it is having their ads adjacent to that kind of content. So that, I think, is making her job untenable. The other thing I'll say is Elon Musk just merged X, the company formerly known as Twitter, with XAI, his AI initiative, which owns Grok, and it was always a little bit unclear what her job was going to be. It seems like this is Elon Musk's company now, not sure what Linda Yaccarino was going to do.
I've been scanning his own X account, and I don't believe he's weighed in on this yet, and that was going to be my question. With the merger of X and XAI, listen, just to run X, the handful of people who could do it wasn't that large, was it? Not with Elon Musk, if you will. Now,
well, he's running X, right?
Right.
Regardless of who he puts in place as CEO.
She had a mark.
Yeah, I mean, the thing that she was able to do, and you saw it, they brought in a handful of influencers, most prominently probably Tucker Carlson, who has developed a pretty substantial following on X, since leaving Fox News. She was sort of trying to build kind of a right-wing media platform, and I think that actually made a lot of sense. You saw that kind of reach its peak around the election. You could really feel like the energy of conservatives going there, but that really depended on Elon Musk having a good relationship with the man in the White House, and that, of course, has changed as well. So again, it's a lot of things that I think makes the job of selling advertising hard. There's also a way in which Musk himself has undercut that business, not only by putting all this edgy content on X, but by moving towards AI and sort of signaling that the point of this company is not to create content that you're going to sell ads against, but it's to train large language models and eventually an AI, and that is a different business altogether.
Really interesting moment, of course, and I know we're going to have more throughout the day from not Elon Musk, but also from Sam Altman's conversations at Sun Valley. What a day. Max Chafkin, thank you so very much for joining us. For more coverage on Elon Musk, don't miss the weekly Elon Inc. podcast from Bloomberg Business Week. This was one I'm going to want to listen to very, very closely. We're going to switch gears. We're going to talk about the fund management industry. Active managers, they're being forced to adopt hedge fund strategies in order to stay competitive, according to French asset manager Arkea. Joining us now for more, Bloomberg senior equity strategist Michael Masika. You know, hedge funds were out of favor for a while here. Now they're starting to roar back, even if they're trailing broader indices. What here is the big pitch, especially as we know the biggest of big hedge funds are paying top dollar for top talent. Can we now see an asset management industry that's doing copycat techniques with a little bit of quant genius in it?
Hi. Yes, I see the point. The thing is here, access to hedge funds is very difficult. What you had is like a lot of retail investors can't really access them. They're like a very, very high amount of money that you need to invest in them. The liquidity is not good. So, you know, they turn to ETF, they turn to passive asset management. So here is the thing. With regulation evolving a little bit, now you have access to funds that have daily liquidity, that can protect your portfolios with what they call an overlay, which are like bespoke derivatives. And that's new in the industry. And I think that's what's interesting here. That's the story that's interesting. It's like giving access to hedge fund style without being a hedge fund.
The thing about it, is this an acknowledgement here that this market is being driven in a large part, not just by retail investors, fine, that's a marginal buyer here, but by quantitative investment strategies? Ultimately, you're not reading the human on the other side of the room, you're reading the machine.
Yes, but what's happening is like people tend just to buy the market as it is and just like ride the gains. The problem is if you're getting into a fund or you're getting into an ETF at the wrong time, what's going on? You're going to need to wait a lot of time before you actually recoup your losses. I mean, obviously, we had a very quick V-shaped recovery recently, but that's unusual. In theory, when you have like a crisis, it can take years before you get your money back. So if you invest in strategies that are, you know, protect your portfolios and that kind of limit the downside, then you're kind of like more confident in your investments, and you know that you can invest pretty much anytime you want.
Michael, we thank you so very much. That is Bloomberg's Michael Masika. And Matt, it's really interesting. A top story on the terminal now is about all the hedge funds making money off of merger wagers, because in the Trump administration, they're starting to pan out, Discover, Capital One, U.S. Steel, Juniper, Hess, Calanova, and a lot of money is being made in that strategy in hedge funds too right now.
Yeah, I'm still blown away by the U.S. Steel deal, but it's true. We're finally getting these deals done, and this is what the market was betting on after the November 5th election, that we would see deregulation and that, some of these combinations, purchases, would be finished. Now merger arbs are cashing in.
Patience has paid. Let's go check out these markets. It's a good day.
Yeah, it is a good day if you're long these markets. We have the S&P right now gaining only about 0.2%, so well off of its highs from the early trade. 62.36, the level. I think 62.79 is the closing high from Thursday. The NASDAQ up 0.25%. NVIDIA right now gaining almost 2%. It did cross that threshold, worth more than $4 trillion. Coming tomorrow, Wilbur Ross, former Commerce Secretary, joins us, as well as Julian Emanuel.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
This villa, very traditional, a lot of things of the past.
I live my very first independent life in the farmhouse, and I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, NVIDIA becomes the first company in history to have reached a $4 trillion market cap. Plus, a new record for a private giant too. SpaceX is in discussions to sell shares that would value the company at $400 billion. And Apple thinks it's too big to tariff. Now, that's according to White House Trade Counselor Peter Navarro. This is wider trade questions remain. But first, we check in on these markets, which actually managed to shrug off a lot of that trade anxiety on the day. In the Nasdaq, up 0.2%. We were trading in excess of 0.5% higher, led by key names such as NVIDIA. Let's just dig into what's happening as we await big bond auctions in the United States. We try to digest what's happening in terms of trade. I am seeing a $4 trillion market capitalization for the first time in history. We touch it, we pull back down a little bit, but NVIDIA is very close to it as we stand out. And this despite the world's biggest market cap erosion back in February after the DeepSeek anxiety. They pulled back and they're up 20%. So far in 2025. Move on though and have a look what's happening with Apple, because from a points perspective, it is the big drag lower on the major benchmarks today. Apple offers, you'll see, by more than a percentage point. This as we hear from Peter Navarro, of course, who whispers closely in Trump's ear around trade, that he thinks that Apple sees itself as too big to tariff, but they are moving fast to change this. Nevertheless, the anxiety remains around Apple and the exposure to certain trade tariffs still to be decided and announced. Bloomberg's Balance of Power host Kaylee Lyons has more. We heard from Peter Navarro, who is on another network earlier today, but bring us up to speed with just where we stand in terms of the new deadline of August 1st.
Well, President Trump suggests that deadline actually isn't new, Caroline. He said yesterday that it's always been August 1st, though we thought today, July 9th, initially was the trade deadline that at least countries were facing in order to make trade deals with the United States. Obviously, that has been punted back a few weeks. The president, in addition to tariffs on countries, is still teasing further sectoral tariffs that could affect companies like Apple when it comes to things like semiconductors, for example. And then there's copper, which he surprisingly announced yesterday. Not necessarily the tariffs itself were surprising because a Section 232 investigation had been opened into copper, but the timing and the scale of the tariff were what caught us a bit aback. 50%, and the Commerce Secretary Howard Lutnick says that could be effective at the end of July or also on August 1st. And you think about a commodity like copper, what that could do to supply and demand dynamics, knowing right now the U.S. doesn't have adequate supply to meet the growing demand for copper because of the role it plays in things like, for example, powering artificial intelligence, or rather the data centers that do that work and the facilities that generate the power for those data centers, the actual infrastructure to get that power to data centers, the construction of data centers that require it for things like cooling systems or their circuit boards. All of that requires copper, and copper could either be harder to come by or potentially more expensive when these tariffs go into effect. So that obviously is one area of the market that has been roiled by tariff news in recent days, and we're waiting potentially For more tariff news, Caroline, the president posted on True Social overnight that this morning he would be announcing 7 countries in regard to trade. Assumably, we assume would be letters like we saw earlier this week when 14 countries had tariff rates essentially set for them that will take effect on August 1st. No news yet on this front, but he did say 7 will come this morning with additional letters to come later this afternoon. So we'll be on watch for those essentially all day here in Washington.
The weaving of politics and technology is so expertly done. Thank you, Kaylee Lines. Now, let's just admit that talk of tariffs are probably going to be consuming much of the conversation over the annual Allen & Co. retreat in Sun Valley. But so, too, is a competition in AI, with companies like Meta actively recruiting top talent from across the industry, including from OpenAI. Now, despite that talent war, CEO Sam Altman says he remains confident in his team.
I think we have obviously we have an incredibly talented team, and I think they really love what they're doing. Obviously, some people will go to different places. There's a lot of excitement, I guess we could say, in the industry, but no, I think we feel fine.
Joining us now is our very own Ed Ludlow in sunny Sun Valley, Idaho. So, thus far, no awkward meeting between Altman and Zuck has been witnessed, right?
No, people I've spoken to haven't witnessed one, and we haven't actually seen Zuckerberg arrive yet. But that was what Sam Altman said, because he was asked, his expectation is that he will see Mark Zuckerberg and that he's looking forward to it. He kind of elaborated on what he discussed on the podcast with his brother a few weeks back, which is he feels the strategy on talent is to be mission oriented, to have the great research lab and a great company. It was kind of a reference to that quote that he had about being mission driven, missionaries, not mercenaries. But again, we're waiting for it to happen. I do know that it's a big point of focus this year here at Allen & Co.
Well, a big talent question has just arisen as well. A movement of Linda Yaccarino out of X. She's posting on the social media platform saying she's stepping down as the CEO. Ed, what do you make of it?
Yeah, I mean, in the post, she's talking about the turnaround job that she's done without sort of giving any specific metrics. The lower down, there's a reference to XAI. Right, and it's really important to remember that post-March, when X and XAI essentially merged under XAI Holdings, that the structure of that company changed. There's a lot of emphasis on how X, the social platform, provides a moat for XAI, the developer of large language models and generative AI tools. But Elon Musk, this is the latest person in his orbit to step down or leave. You'll remember the reporting about Omid Afshar leaving Tesla, other senior executives in other places. So very interesting to see what happens big picture with X and where it fits in alongside XAI, rather than just being an ad-based social platform.
And let's talk about orbits and Elon Musk a bit more, because you have a great scoop out on SpaceX, working with colleagues, talking about how it's going to be perhaps a record-setting valuation of a private company.
So SpaceX does tend to do a secondary or tender every 6 months, and they use this mechanism where it's concurrent with a very small primary. In other words, they sell a very small number of new shares to set the price and the valuation. And what we're hearing from sources is that that valuation is now above $400 billion. And it's astonishing, right? Like, it's a milestone, most valuable private startup. But, it's also in the backdrop of Elon Musk and the President of the United States. SpaceX relies heavily on contracts from the US government, defense apparatus, but it also dominates commercial payload to orbit. And that valuation continues to climb with a really heavy emphasis on Starlink. A big part of it as well, of course, is about employee liquidity and talent, because there are people that have worked at SpaceX for a really long time, and stock is a big part of comp. Loads of people watching this show will know that. But it continues to go up, and that's super interesting.
It is still validation in Elon Inc., it feels at this moment, Ed. But what everyone's going to be talking about where you sit is also a bit of M&A, and a healthy amount potentially going on in the media landscape. Talk to us about A&E.
Yeah, I mean, this is the history of Allen & Co. and Sun Valley, right? TMT and M&A. And the news that we've had in the last 24 hours is that A&E, which is the joint venture between Disney and Hearst, is available for sale. That's kind of like the cable channels, including History Channel. Shout out History Channel to those that watch it. Bob Iger walked past and we asked him, can we talk a little bit about A&E? And he said, I'm not going to be talking about that right now. But it is some property up for grabs. And then you have Warner Brothers Discovery that's on a path to split between a pure play streaming business and a pure play studio business. And we did catch up with David Zaslav, who said, like, look, we're on track. There are no approvals needed. We aren't ready to talk about the debt side of this. But all of that indicates that in this space, some stuff might happen, and I think that's what people are going to be talking about a lot in and amongst all of the seminars and coffee stops in the next few days.
A history lesson on the History Channel and the History of Alan Co. Ed Ludlow out in Idaho. Love catching up. See you soon. Meanwhile, let's dive into all of this with Scott Ladner from Horizon Investments, who, of course, is taking a temperature gauge of the markets right now. And, Scott, we're looking at maybe a little bit of M&A coming to bear. We're seeing phenomenal valuations on the public market with a new $4 trillion company, if we can retain it back for NVIDIA, and that $400 billion private valuation for SpaceX. Can we sustain these sorts of valuations, Scott?
Hey, Caroline, long and short, yes, I think we can. And the reason why we probably can is because these companies are growing into the valuations that the market is placing upon them. This is not like, kind of not like the 90s where those companies really sort of got ahead of themselves and they weren't making enough money to justify the valuations ultimately. But these, this generation's tech companies, have ROEs in the 30s, and that, that is a very sustainable kind of valuation metric that we can use to say, yeah, this is pretty sustainable right now. Like this is we're not in bubble territory anywhere close to it.
I mean, return on equity looking still healthy and not too eye-watering. Scott, will that be vindicated in the earnings season that we're about to get? Will Microsoft, will some of these, particularly the hyperscalers, be able to commit to the spending that drives NVIDIA yet further higher?
Yeah, that is obviously the trillion-dollar question. Like, do we get continued growth and continued upward pressure on those ROE kind of metrics? You get the ROE expansion by having additional profitability, additional margin expansion, and just overall just better execution on the business side. And if these companies can continue to do that, then there's no reason why we can't be substantially higher in a year from now in many of these companies than we are right now. Our expectation is that that's going to continue. There's no reason why it really shouldn't at this point. We are still early stages of the AI revolution. And that is our expectation currently.
I mean, I guess the extraordinary matter of all of this is, of course, we saw the biggest sell-off ever in a market capitalization of NVIDIA just in February because of the worry of DeepSeek. But we also have the tariff anxiety that just doesn't seem to impede its valuation. Is that something that could knock off valuations, or do you think we're getting numb to tariffs?
We're definitely getting numb. I mean, look, the market is not trading like it used to in April based on the tariff headlines. You see there's just sort of a diminishing return towards the shock that the market is able to absorb with these. Because now we sort of we think we understand what the playbook looks like. Playbook looks like, talk tough and then eventually find some way to get a deal that's acceptable to everybody. And if that continues apace, then there's no reason why why the market can't sort of sustain these types of levels. But getting comfortable with the way that the tariffs are going to end up going and figuring out the market, frankly, is starting to figure out that there's not really an alternative still to NVIDIA and some of those chips, despite despite some of the DeepSeek stuff. And that's why we've recaptured these all-time highs in valuations.
It does seem to be a story of AI winners and then the laggards. And where talking tough has really got hard today is on Apple. Once again, Peter Navarro calling it out, saying they think they're too big to tariff. Are we just going to see more money pile into the infrastructure layer? Or at what point are we going to start to see companies winning out with the application of AI, which thus far Apple doesn't seem to be on top of?
Yeah, we think that's probably a 2020, like late 2025, early 2026 story. As we move from the the makers of the stuff to the users of the stuff, and that's probably going to be the most important investment call to make as we come into next year. Is like figuring out which companies and which sectors are actually able to use the AI technology, which is amazing, to increase profit margins, to increase productivity, and that's we're spending quite a lot of time on that here at Horizon, and it's something that we're actually pretty excited about. But the focus on the intense focus we've had on the infrastructure side, it's probably not going to go away. It's not going to be diminished, but it's going to broaden out towards more towards those users and some of the ultimate winners in the space, which are always the users of the technology rather than the makers of the technology.
I mean, I know you say it's still early days, but can you give us an inkling of where you're getting most excited about? Is it the healthcare space? Is it elsewhere?
Healthcare is definitely one of the top of the mind in terms of the people that can use this to just really speed up the drug development. Is there like an obvious application for some of these things? I mean, the exciting thing, Caroline, though, I think is we don't really know what's around the corner. I'm not smart enough to figure out like what the next shoe to drop is and like which companies and sectors are really going to take, especially like the agentic AI and into the next level. And so we are spending a fair amount of time kind of figure that stuff out right now. But I don't know what I don't know, and that's actually some of the most exciting parts about this. Is really have to stay front-footed and do the research and just listen to what you're seeing.
And Scott, therefore, do you take money out of prior winners to allocate to the future ones, or are you taking out of just lagging industry groups that you just don't want to be allocated to at the moment?
I think it's more you probably do take some out of the infrastructure plays. You take some out of the prior winners, some out of the NVIDIAs of the world. And but like as I said earlier, Caroline, it's more of a broadening play. So I think you actually increase the overall allocation towards AI in your portfolio, but you're taking out some of like the NVIDIAs of the world. You're also taking out of like industrials. You're taking out of like utilities. You're going to take it out of some of the more boring like staples types of things. You probably just want to allocate out of those types of sectors and just overall increase your breadth of your AI in your portfolio.
Scott Ladner of Horizon Investments, Chief Investment Officer. Thanks for pushing us forward. We appreciate it. Coming up, Samsung unveils a slew of new foldable phones. More on that next. This is Bloomberg Tech.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Time now for Talking Tech, and first up, Waymo's first self-driving taxis have arrived in New York City, but full autonomous operations remain pending regulatory approval. Now, in the meantime, the company is collecting data across the city with safety drivers behind the wheel as it awaits to begin self-driving tests. Plus, a California lawmaker makes another push to regulate AI in the state. Senator Scott Wiener has introduced a bill that would require companies developing certain AI models to publicly release safety and security protocols. The bill is expected to go before a California Assembly committee later this month. And Samsung has unveiled its latest smartphones and wearable devices at its annual Unpacked event. It's announced 3 new foldable devices, each thinner, lighter than previous iterations. The company also revealed a new line of upgraded smartwatches that use Google's Gemini AI. Now, for more on Samsung and plenty elsewhere in consumer tech, Bloomberg's Mark Gurman joins us. You haven't had your hands on these things. They look pretty good. What do you make of the announcements from Unpacked?
I think these are hugely significant announcements. What Samsung is trying to do here is take foldables mainstream. So two main levers they've pulled here. One, they've widened the display. So they've made it less narrow. This is an older Samsung foldable right here. And you can see how narrow it is. And if you're used to working on an iPhone or a regular Samsung phone, the narrow form factor makes it quite difficult to use. So they've expanded it. So now in the closed state, the new foldable Fold, this is the $2,000 model, feels like a normal candy bar phone that you can then open up to have even more screen real estate. The other thing they've done is they've released a sub-$1,000 foldable. This is a new version of the Flip. That's their vertical phone. And that price point makes it a lot more compelling and is taking it out of the early adopter price range. And it's interesting because foldables have been popular amongst the early adopter crowd, some of the techier crowd, more of the productivity-focused crowd. But now Samsung is trying to take it mainstream. And really, those were the two levers they needed to pull in order to accomplish that. So we'll see what happens. Next year, Apple will announce their foldable, which certainly is going to bring a much bigger spotlight to the category, not only for its own product that they're unveiling, but for everyone else who already has foldables on the market.
And Mark, just spotlight Apple a little bit more for us, because you brought us that news yesterday that a changing of the guard COO is now departing, perhaps not unexpectedly.
It's a blockbuster move. As one former Apple executive told me, the band is dissolving, right? At some point in the next few years, it's going to be Tim Cook left standing with a whole new executive team around him. These are serious organizational changes happening at Apple. There are more to come. Obviously,
change. Will your business shape the future or be shaped?
Congratulations on a stellar year, the best in a while. We're also seeing the biggest sales of assets in a long while. Where were these divestments from?
So I would say, firstly, yes, we did have a record portfolio value of 434 billion, up about 45 billion from last year. But, a lot of that depends on market conditions. So the year-to-year numbers are always volatile. And for us, what's more important is really the long-term returns and having a portfolio where we are reasonably confident of getting to our targeted returns with a narrow range of outcomes. And part of that is basically shaping our portfolio in line with what the current outlook is. So when you look at a lot of divestments, you also see a lot of investments. And part of it has been the effort we've been making over the last few years to rebalance the portfolio, again, to be more resilient in the environment we are in compared to the last decade.
So there were net investments.
Yes.
But where were these divestments from? Which markets did they mostly come from?
Pretty much across the board. I mean, for example, some of it was just capital return by Singapore Airlines for some of the capital we had provided during COVID. There was return of capital by Fullerton Financial Holdings when they sold the last portion of the stake in Fullerton India Credit in India. We've had Pavilion Energy that was sold last year. Beyond that, I would say amongst our listed portfolio, there were a lot of positions we trimmed. And we often do that when either a thesis is played out, but we trim when we may be making new investments across a similar theme and therefore rebalancing from one stock to the other.
What about for private asset allocation? How are you thinking about that now? Is there some reduction?
No, I think part of the small difference you see from 52 to 49 on private assets was just because the public markets did so well and our public portfolios, including our Singapore-listed TPCs, did so well last year. So it's not that we are, over the long run, our private assets have given us better returns than public, just because, as you would expect, because of the liquidity premium you can harvest there. And that continues to be a big focus for us. So we made significant private investments this year.
So are you quite positive on the outlook for private equity for the year ahead?
Yes, look, again, I would say there's been an issue in terms of liquidity because there's been fewer IPOs, fewer monetizations the last year. For us, actually, because we're in a very liquid position, we actually have a very strong liquidity position right now. That actually gives us opportunities to buy really attractive assets that some other asset owners or funds may need to sell just because of their liquidity needs. So actually, we're finding it a pretty ripe environment to invest in private assets right now.
What about more of the lasting impact or effects to investor business confidence amid these uncertainties?
So that's why we need certainty around the tariffs. The main impact is really through business confidence, right? And when it's uncertain, it's difficult for you to make an investment commitment. It's difficult for you to hire people, which is why we've seen a bit of a slowdown in the economy, and we expect that in Q3. Having said that, because governments have responded around the world with reasonably aggressive fiscal policies, central banks in most parts of the world are easing or have plans to ease. So actually that impact has been mitigated, which is why the risk of a recession today is, I would say, quite low. And once you have tariff certainty, and then through the year, as central banks are cutting rates, as you see more deregulation in the US, et cetera, we would expect a pickup of growth going into 2026.
Were you surprised in how the ultimate impact from Trump policies played out in the slide of the dollar?
Well, I do think that the way the dollar has behaved this year has been surprising. During risk-off periods, normally the dollar tends to appreciate, and you haven't seen that this year. And it is frankly something that all investors now need to factor in, that you can't just assume a one-way move of the dollar upwards, and now we've seen the reverse out there. So historically, most asset owners would not hedge most of their US dollar exposure. Because as I said, during risk-off periods, the dollar would appreciate, so it was a natural diversifier. That's no longer the case. So we, and I think all investors, have now got to factor in the cost of US dollar depreciation on our returns. Like for us, we measure it in Sing dollars. We can, of course, hedge it, but even hedging has a cost. And so we have to factor that in all our investments.
So you don't necessarily expect a reverse higher in the greenback later this year?
Look, I don't think it's very difficult to predict currency movements as such. I think what's sort of clear is that there are forces on both sides. In the very near term, the key forces that are leading to the depreciation of the US dollar is everyone trying to hedge at least part of the exposure because people had almost no hedges on the US dollar exposure. And that is putting a natural pressure. At some point, that will abate. Beyond that, it'll be a question about capital flows in out of the US, trade flows, capital flows, which we will have to see how they plan out. But near term, I do expect pressure purely because more people are looking to hedge their exposure, and that naturally puts pressure on the US dollar.
How comfortable are you in investing in China tech and China AI?
So I would say, in terms of AI adoption, China is going to be pretty advanced on that, adopting AI for productivity or other things. That's because we have so many engineers and AI tech people out there that the diffusion into companies to adopt AI, I think is going to be quite fast. So you take an example, a company like Tencent. We invested out there. It is clearly benefiting from AI in terms of how it uses it for its own business. So I do think you will see in China too, particularly on the adopters side, significant opportunities for us to invest.
How long-term a view would you have to take on that, though? Because it's interesting, we've seen these AI developments, yet they're not really driving tech earnings upgrades. That seems to be quite modest still.
So at the near term, it's obviously having an impact on productivity for those who find it, who are equipped to use it. So the most obvious example of that is, let's say, the Magnificent Six, companies like Microsoft or Google or Amazon. And they all talk about the fact that they need far few coders, for example. And actually, one of the ways that their earnings are being upgraded is because how they manage their costs as AI improves productivity. So we already are seeing it in one group of companies who are best equipped to use it. As that gets diffused across more and more companies who have the ability to use it, I think you will see that spread out. Now, it may take time, but I think on some companies, you're already seeing that today.
How are you managing the China real estate exposure as well?
So look, that has been a challenge over the last few years. I don't think we're out of the woods out there, but the pace of decline has, I would say, stabilized to some extent. The government's very conscious about stabilizing the real estate market, and they're taking efforts towards that. They clearly don't want a bubble to be recreated, so I don't think we can expect a sharp rebound. But it is something that we will, our portfolio companies, because I think our China real estate exposure is primarily through our PPCs like Capital Land and Mapletree. And they're looking to see how to manage through this environment, including making investments elsewhere too.
Would you say that previously it was a bit more cautious in the past year, at least when you're looking at China investing, and that now there's a change, a more positive outlook for Temasek?
So I would say China's always been a very important market for us and one of our biggest markets. And we think as an $18 trillion economy, there will always be significant opportunities for us. So our focus out there, and compared to most other asset owners, our exposure there is very, very significant. So the downside risks that we were concerned about last year, the government has actually put a floor to that by saying, look, we will provide support to make sure that the economy continues to grow at a certain level. And you've seen first half of this year, our estimates are it'll grow over 5%. So in that sense, it's changed. But I think our view on China, even last year and this year, was that there will always be high-quality companies, particularly focused on the China domestic market, for us to invest in, and we continue to do that.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth? And unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
How comfortable are you in investing in China tech and China AI?
So I would say, in terms of AI adoption, China is going to be pretty advanced on that, adopting AI for productivity or other things. That's because we have so many engineers and AI tech people out there that the diffusion into companies to adopt AI, I think is going to be quite fast. So you take an example, a company like Tencent. We invested out there. It is clearly benefiting from AI in terms of how it uses it for its own business. So I do think you will see in China too, particularly on the adopters side, significant opportunities for us to invest.
How long-term a view would you have to take on that, though? Because it's interesting, we've seen these AI developments, yet they're not really driving tech earnings upgrades. That seems to be quite modest still.
So at the near term, it's obviously having an impact on productivity for those who find it, who are equipped to use it. So the most obvious example of that is, let's say, the Magnificent Six, companies like Microsoft or Google or Amazon. And they're all talking about the fact that they need far few coders, for example. And actually, one of the ways that their earnings are being upgraded is because how they manage their costs as AI improves productivity. So we already are seeing it in one group of companies who are best equipped to use it. As that gets diffused across more and more companies who have the ability to use it, I think you will see that spread out. Now, it may take time, but I think on some companies, you're already seeing that today.
How are you managing the China real estate exposure as well?
So look, that has been a challenge over the last few years. I don't think we're out of the woods out there, but the pace of decline has, I would say, stabilized to some extent. The government's very conscious about stabilizing the real estate market, and they're taking efforts towards that. They clearly don't want a bubble to be recreated, so I don't think we can expect a sharp rebound. But it is something that our portfolio companies, because I think our China real estate exposure is primarily through our TPCs like Capital Land and Mapletree. And they're looking to see how to manage through this environment, including making investments elsewhere too.
Would you say that previously it was a bit more cautious in the past year, at least when you're looking at China investing, and that now there's a change, a more positive outlook for Temasek?
So I would say China's always been a very important market for us and one of our biggest markets. And we think as an $18 trillion economy, there will always be significant opportunities for us. So our focus out there, and compared to most other asset owners, our exposure there is very, very significant. What has happened in the last year? I mean, I would say a couple of things. Confidence has improved, particularly amongst entrepreneurs. DeepSeek was one moment which actually led everyone to believe that despite these trade tensions, China can compete with the best. There's also belief amongst private companies that the government is supportive of them. And so you are seeing that improved confidence out there. The government's also made it clear that, yes, they're not going to create a bubble in the economy, so you're not going to see a major turbocharging the economy, but they will provide stimulus wherever they feel that growth is slowing down to levels that are not acceptable to them. So the downside risks that we were concerned about last year, the government has actually put a floor to that by saying, look, we will provide support to make sure that the economy continues to grow at a certain level. And you've seen first half of this year, our estimates are it'll grow over 5%. So in that sense, it's changed. But I think our view on China, even last year and this year, was that there will always be high-quality companies, particularly focused on the China domestic market, for us to invest in, and we continue to do that.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
When you hear a 50 or 200% number thrown out from Washington, we're so used to a bigger reaction. Where's the volatility?
Yeah, it's true. It feels like markets have almost just adjusted to this, these big headline numbers when it comes to tariffs. I think the reality is that when the detail comes through in the financials for companies, that's when markets will react now. So we probably won't see that, for example, say come through in inflation prints, for a couple of months, for earnings until again next quarter. But I think that's when potentially investors can get a bit more of a surprise. There's definitely inflationary pressures coming through in the system, particularly if you look at the supply chain that comes through Asia. There was a lot of diversion happening in the last few weeks and months of China going through Vietnam, through Thailand. We've now seen those rates, they're not coming down, contrary to our expectations. So that is going to require some change in inflation in the system.
So what's the canary in the coal mine there? What is the red flag? Is it the data? Is it monetary policy? Is it a Trump tweet or a Trump truth, as they're called, that shakes this market? What moves it?
I think it's core CPI. So we've been trending low in core CPI for several quarters now. I think we will see an inflection up in that in the coming months, and likely, as we've seen in the past, when you get these positive surprises, they don't tend to be small surprises. They can be big, big jumps and surprises. And I think there'll be a month where we get that, and that will really, kickstart the market into worrying about those things.
Can you put a number on that? What kind of upside reading are you expecting in CPI to year end?
I think myself and others have shown that we should be very humble in trying to make the predictions around CPI. So I'm definitely going to not put myself down to a number, but I do think there is an autocorrelation of inflation expectations. So when you go through a period whereby inflation is coming down, people tend to get more accustomed to that, and vice versa. And we've seen that in the past. And I'm just saying, I think we are set up to have another period of that. These copper tariffs are extremely inflationary. I don't know how, in the near term, you can kind of circumvent and get around some of these high price hikes in terms of inflation coming through the system.
Is there a sector that you're keen on looking into in terms of their exposure to copper that, maybe the market and us all are underpricing?
So I think the cables you mentioned is an interesting one. So the miners, the reason they're not stronger this morning is because you have this basically spread gap now opening between COMEX and LSE. And most of the miners here will be exposed to LSE pricing, which actually in the short term could be under pressure. So you actually want to go through to companies which are going to be taking copper as input, putting that into their pricing. They won't be exposed to the same sort of tariff increases to that 50% degree. And so things like cable manufacturers, which are very heavy in terms of copper input, actually are a way of thinking about it.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives, and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
The administration is looking for that last bit of pressure to get these deals where they want them to be.
This is a perpetual negotiation that we'll continue to see unfold.
This is President Trump at his best, bringing the pressure and supporting his negotiators.
The market is trying to operate like this is going to be a nothing burger, but we are seeing tariff rates go up.
As the days and weeks accumulate, we're going to get greater certainty around what the trade policy posture is going to be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, the trade deadline slides.
The president will also sign an executive order delaying the July 9th deadline to August 1st. So the reciprocal tariff rate or these new rates that will be provided in this correspondence to these foreign leaders, there will be additional letters in the coming days.
President Trump's new tariff threats look just like the old tariff threats. As the European Union rushes to put together a deal before the new deadline, Secretary Bessent is preparing to meet with China for another round of talks. Similar tariffs, very different price action.
This is a market that has the picture. This is a negotiation. It's escalate to de-escalate. There's sort of a fool me once, shame on you. Fool me twice, shame on me, because this is a market that has seen this story before. At each deadline becomes another delay for this perpetual policy of uncertainty. And that is the key question that I have. How do companies and how do investors adapt to that type of environment?
I totally agree with you. I think two big disappointments for a lot of us. One, July 9th is not going to be a clearing event. This is going to continue. And two, if you were hoping for cuts from the Federal Reserve, this makes it harder for this Federal Reserve to cut interest rates.
Absolutely. What we've heard from Jay Powell time and time again is we don't know the tariff rates. There's a lot of uncertainty. So it's making us basically say frozen in place when it comes to policy. Well, guess what? How difficult is September going to be for them to potentially cut, which a lot of people were excited about? If we're not going to get the tariff rates at this moment, we think August 1st. And if you see April 2nd become July 9th become August 1st, who's to say that August 1st also might not slip?
For the threats to be credible, you have to believe there could be some follow-through. And based on the price action of this morning and yesterday, it's difficult to believe that a lot of people think there's going to be follow-through.
A note from Citigroup coming out. We still expect a deal with South Korea. South Korea saying we view this as a negotiation and we'll be at the table. You've got Japan saying we're not going to take a bad deal. You have a European Union about to maybe make a deal in the next 48 hours, whatever that means. And then the details, of course, have to get worked out. There's a key question here about what the final outcome looks like and whether we have adjusted to this idea of a base tariff rate that is materially higher to pay for the deficit as sort of a policy, not necessarily some sort of negotiation.
Also, the president's rhetoric last night was very wishy-washy. Quote, I would say firm, but not 100% firm. If they call up and say we'd like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now. If you want to play ball, you have to. This is what you have to pay. Right now, with these 14 countries, which basically, essentially, the tariff rates did not change, just the dates, he is in negotiating mode. I'm waiting for the other deals to potentially drop. With these countries like India, like the European Union, like Switzerland, that we have seen the United States deeply engaged at the negotiating table.
So far, not much change in the equity market, at least this morning. Unchanged on the S&P 500. Lots to get through this hour. Coming up on the programme, we'll catch up with Ed Yardeni of Yardeni Research as stocks look to bounce back. The former NEC Deputy Director, Everett Eisenstadt, as President Trump buys time. And Kelsey Barrow of JP Morgan on the odds of a September Fed rate cut. We begin this hour with stocks little changed as traders face down the latest tariff threats. Ed Yardeni of Yardeni Research is optimistic, writing, we tend to be perma bulls because there are so many more perma bears. We focus on the positives and frequently find them to be more compelling than the negatives. Ed joins us now for more. Ed, welcome to the programme, sir. Let's talk about these tariffs first up. The tariffs themselves and the threats look very similar to what we heard on April 2nd, right, but the price action is so different, Ed. What explains that?
Well, Liberation 2 is, been there, done that. That's really what's going on here, is the market figures this, as you folks said, this is, the art of the deal. It's negotiations. Let's not forget that Trump's background is commercial real estate and residential real estate in New York City. And, they do a lot of negotiating there between other developers and politicians and labor unions. And they scream and they shout, but all that happens, all that bullying and negotiating occurs behind closed doors. Trump has taken this to another level and to a global level of negotiating publicly with leaders around the world on trade. So it's not a pretty thing to watch, but I think the markets have figured out that this is going to get resolved in the next few months. It has to be, because otherwise Trump's going to really risk losing the midterm elections for the Republican Party, and that's not going to be good.
What if it doesn't, Ed? What if it isn't resolved? How do you think markets handle an extended period of ambiguity? And what would you expect corporations to tell us in the upcoming earnings season?
Well, I think, first of all, when it comes to all this impact on the United States, so far it's been remarkable. The resilience of the economy has been absolutely remarkable. I've been in the resilient camp, and I'm in awe at how well the economy is hanging in there, how well consumer spending has been hanging in there. And I'm also in awe about inflation. Inflation really hasn't picked up. Some of the indicators for July suggest that it's actually going to be pretty close to zero during that month. It's a little early in the month, but there is sort of a nowcast for that. So all in all, I think the U.S. stock market is doing what it's supposed to do. It's supposed to take the long view. And the long view is still quite optimistic, I think, with the technology revolution we're in, the digital revolution we're in, and likely to continue to have very positive impacts on the U.S. economy and productivity.
For a perma bull, your recent note was pretty bearish, and it really focused in on the labor market and the fact that private industry payrolls rose only 74,000, which was the lowest in your data going back to 2004. And this points to something happening under the hood that isn't the sort of equilibrium that can keep on going for a longer period of time. Why do you stay bullish, even with that factor?
Well, to maintain my credibility, I do make sure to constantly write about what the bears are saying. And I was actually a little surprised that there wasn't more bearishness for the economy anyways, and the stock market, about the employment numbers that came out on Thursday. And they were weak. When you take government employment, and a lot of that was education employment, maybe we're hiring a lot of teachers and getting them ready for the new school year. Maybe the schools have been overwhelmed with kids of migrant workers, and so they've had to load up. So maybe that's a real number. But take out government employment, and we're up only a little over 70,000 in non-farm payrolls. So I did point all that out, but then I put a positive spin on it and concluded, this is the economy has been stress tested by tariff man, by all this tariff turmoil that we've had. And yet it's passing the tests. The banks have passed the tests. And so, I kind of stick with the data. And the data, on balance, I think, suggests that we probably will see some better employment numbers and a better economic growth in the second half of the year.
Just the counterpoint to this, and I can already feel people rolling their eyes, it's sort of bearish counterpoint. There is a fear that the market isn't responding to bearish news, that there isn't some sort of sell-off, that there isn't a response function because people have been trained not to be bearish, because the bulls have won out again and again, and people just keep leaning on all the liquidity in the market, but a lot of that liquidity is going to have to go to financing some of the fiscal deficit around the world of developed markets. How much does that factor in? How much do you start to watch that and say, hold on a second, something could be brewing here?
Well, you can look at the fundamentals. You can, I guess, put together a list of everything that's bearish, that should take the stock market down. And then you can also look at the stock market and say, why isn't it going down? And I think first quarter earnings were much better than expected. Second quarter earnings, it's a layup. They're going to be better than expected because expectations are so low. And so I think that's going to be quite good. And then we are seeing that the president's tax bill was passed. It's an extension of the tax cut, which is bullish for the economy. In addition, from what I understand, if you want to build a data center, you can build it and depreciate the whole thing, expense the whole thing in the first year. I think I got that right, but I'm still checking that out. But I think, in other words, there's a lot in that bill that is in fact quite stimulative. The president has in fact brought a lot of money committed to onshoring in the United States. There's a lot of positives going on.
Ed, when it comes to what's going on in the financial markets, Liz Ann Saunders of Charles Schwab contemplates this in the Financial Times. On top of a Trump put, she says maybe there's this potential for a Trump call. Do you think that means that we potentially get a more aggressive White House when it comes to policy?
Well, I think certainly the Treasury seems to be on the verge of financing more of the debt with Treasury bills, which I think is why the bond market yield hasn't gone straight up. It's been going up somewhat here, and I think it's still consistent with my view that the bond yield should be trading around 4.5% through the end of the year. So I really don't have a problem with this backup in bond yields the past couple of days. But the Treasury seems inclined, based on what Trump recently said, to finance a lot more in the Treasury bill market, then wait until they have their loyalist as the new Fed chair and hope that the loyalists can get interest rates down. So I think a lot of the action is going to be on how we're going to refinance the debt.
Ed, where are the bond vigilantes? You coined that term. A lot of people have been saying they're in hiding. They're not doing their role. They're not picketing. We're not seeing those protests. Are they going to show up, or is that sort of an outdated term?
No, I don't think it's outdated. It's, I coined it back in 1983, so we're talking about it now, and it's still relevant. However, the important thing to recognize is the bond vigilantes are not the only force in the bond market. There's the Fed, there's the Treasury now, and of course foreign investors. They're all important influencers of what happens in the bond market. I think the bond market it's hard to really short bonds here when you've got the president of the United States on Fox News saying that he's going to finance the next several rounds of debt, government debt, that he's going to refinance it with T-bills. We saw what happened back in November 1st of 2023 when Treasury Secretary Janet Yellen at that time did the exact same thing, and the bond yield, which got up to 5% in late October, just took a dive on that news. So it's hard to be a bond vigilante when you're fighting the Treasury.
They are not in a position to extend duration right now, that's for sure, Ed. Thanks for your time, sir. Ed Yardeni of Yardeni Research. Looking at the 10-year this morning, slightly softer, yields higher by 3 or 4 basis points. Let's call this 4.42. Just on the equity market, thinking about earnings season coming up, Max Kettner of HSBC put this one out yesterday. The bar to beat is very low going into earnings season. The big story in July, not this week's tariff deadline. It's the start of the reporting season next week. Any dip this week has to be bought very quickly.
July 15th, kicking off with JP Morgan and the bank earnings. A lot of people are expecting the earnings to be just like Ed Yardeni said, much better than expected, as they were in the prior quarter. And how much of a boost that gives really is that low bar that a lot of people are saying is easy to step over.
Equity's doing okay so far this morning, just about unchanged on the S&P 500. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump delayed imposing higher tariffs on US imports until August 1st, while sending letters to countries detailing the levies that they'll face. The letters include 25% tariffs on goods from Japan and South Korea and plans for more than a dozen other countries. The president also teased the possibility of further talks ahead of the new deadline. And elsewhere, Apple's top executive in charge of AI models is leaving the company for Meta. Sources telling us here at Bloomberg that Roming Pang is joining Meta's new superintelligence team after being offered a package worth tens of millions of dollars per year. And President Trump says that he'll travel to Texas on Friday to see the devastation from flash floods, which killed at least a dozen people, 100 people, and left dozens still missing. The deaths include at least 27 children and staff from a summer camp. Recovery teams expect to find more victims as a search continues. That's your Bloomberg Brief. John.
Lizzie, thank you. Appreciate the update. More from Lizzie later this hour. Up next on the programme, the White House buys some time.
The president will also sign an executive order delaying the July 9th deadline to August 1st. So the reciprocal tariff rate or these new rates that will be provided in this correspondence to these foreign leaders.
Up next, we'll catch up with Rob Casey of Signum Global Advisors, live from New York City this morning. Good morning.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
In yesterday's session, snapping a 2-day winning streak on the S&P 500, the biggest one-day loss going back to mid-June. This morning, not much price action to speak of, pretty much unchanged on the S&P and positive by about 0.1% on the Nasdaq 100. Under surveillance this morning, the White House buys some time.
The president will also sign an executive order delaying the July 9th deadline to August 1st. So the reciprocal tariff rate or these new rates that will be provided in this correspondence to these foreign leaders.
All of those, to understand it correctly, are now deferred to August 1st, right?
Correct. There will be additional letters in the coming days. He is literally looking at the map and looking at every country on the planet and seeing where they are ripping off the American people.
So here's the latest. The White House confirming that President Trump delayed increasing duties on key trade partners until August 1, but threatened new tariff rates on countries including Japan and South Korea. Bloomberg's Tyler Kendall joins us now from Washington for more. So, Tyler, explain the difference between what we heard yesterday and what we saw on April 2nd.
Yeah, hey, John, good morning. Well, by and large, the tariff rates that were outlined in these letters to more than a dozen countries were basically in line with what we saw on April 2nd. Some were marginally higher, Japan, for example, by 1 percentage point, but many were the same, including South Korea as well as Indonesia and South Africa. It is worth pointing out that some were actually pretty lower, including Laos and Cambodia, the latter of which saw the largest drop from 49 to 36% when it comes to threatened tariffs. Now, we're really going to be watching to see if more countries come into this picture and if their rates change in a meaningful way. Bloomberg Economics says that this initial wave of tariff letters, these countries account for about 15% of U.S. imports. So there's still a lot of other trading partners out there. And you heard the White House press secretary indicate that there could be some more letters going forward here. Now, some of the things that we are watching when it does come to potentially how these tariffs could ramp up is that, well, all of these letters had a few different consistencies. One is that President Trump threatened that there could be higher tariffs if there are transshipments of goods. Of course, big questions here going forward about how that could be enforced. And then the second is any sort of retaliation. John, President Trump said that the U.S. will just slap on an identical rate if any country does retaliate in response to these letters.
Tyler Kendall with the latest down in Washington. More from Tyler later on this morning. Bramo, the difference. April 2nd, 24% on Japan. July 7th, 25% on Japan. All these tiny little differences between where we were back then and where we are now hardly make a difference.
But there is a difference in terms of the timing and what the market and all of us have experienced, which is a deadline's not a deadline. And that, I think, really set the tone for the path forward.
Let's build on that conversation with Rob Casey of Signum, looking at tariffs and writing the following. Consensus currently is that July 9th will simply become August 1. However, we would suggest being cautious around this view and staying on guard for tariff snapbacks sooner than then. Rob joins us now for more. Rob, good morning.
Morning.
You said it. A lot of people are feeling it. We can just look through all of this. Lisa explained it perfectly. Why do you think there is a risk of actual follow-through here?
Well, I think there's a risk of follow-through, A, because President Trump has not gotten the concessions that he wants in private negotiations or in, public negotiations with posting these letters. And he is potentially running out of room, right? We may get a court decision on IEEPA this fall. Trump essentially has the opportunity to negotiate between now and then. So they're telling us they're getting closer, right? And maybe we get a bunch of deals over the course of the next week or today. If not, I think they probably want to push their advantage before, caving or taking a step back.
What's the deciding factor that dictates the shape of those deals? What's the difference between becoming the UK or Vietnam or Japan? What's the difference?
Well, I think that's clearly an open question. What we've seen in the UK deal, the Vietnam deal, among others, is, frankly, they're not very detailed. So I think that the deciding factor is the leader on the other side of the table is willing to accept what President Trump wants in broad terms, in vague terms, and maybe they're able to sell it to their domestic constituency, and then Trump is able to come back to us and say, we made a good deal. But that's not to say that these are, even the trade deals that are struck, they're still not very detailed.
When you talk about concessions the administration is looking for and they haven't received them yet, what exactly?
Well, across the board, I think there are really two. Trump wants to be able to message that he's bringing down tariff levels on U.S. goods being exported elsewhere. He wants to message that he's decreasing the trade deficit with individuals. I think that is probably the one with individual countries. That's probably the one that's going to get the most play from President Trump so far, because even when he's announcing, 25% on Japan, 25% on Korea, he's saying these tariffs are not enough to rectify the trade deficit. So he's still focused on the trade deficit. He still sees it as a problem, even at these higher levels.
When you look at things like the United Kingdom, Vietnam, even the slew of deals we saw on his Middle East trip, what happened to all of them? What is the process that's now happening behind the scenes within the administration to actually make sure the details of the deals get done? Who's working on that?
Well, I think it's behind the scenes, Anne-Marie, for a reason, right? We're not 100% sure.
Do they even have the staff?
Well, that's what I was going to say. Is 90 days ago, we heard 90 deals in 90 days, right? And that sounded impossible then, and clearly it was impossible, right? Not every country that has tariffs to be applied, today or August 1st, not every country has even had FaceTime with the president's administration. And so if you're a country saying we haven't even had the chance to negotiate, and now we're getting these tariffs slapped on at a higher level, what are you supposed to do with that? So I think it's clear that there is not the bandwidth maybe that they had expected, because these deals aren't quite as easy as Trump, Best, and among others, hoped.
There might not be the bandwidth. There's also a question about the framework and what kind of framework they're using to really understand what to extract from different trading partners. It's, buy more rice, buy our chickens, talk about, car exports. There's this question of raising the ante and using it as sort of a national security tool as well as a trade tool. Have we gotten any clarity around what the framework looks like?
Not a lot of clarity. I think one thing that we can see from both the UK and Vietnam is that President Trump wants to come back to the U.S. and message that we are able to send more goods elsewhere, right? And that's, broadly speaking, so far, I would say, mostly focused on the U.S. farm, ag industry. We also want to be able to sell more cars elsewhere, export, build up manufacturing capacity in the U.S. I don't think we can forget about a general goal of building up manufacturing capacity in the U.S. Each individual deal may not get us that much closer, but I think that's the overall trend, at least that President Trump is hoping for.
The goal is also to raise revenue, and this is sort of a key component with the one big, beautiful bill, and we did see the tariff revenue surge to a record $24 billion in May. How much is that sort of a sticking point at this point? They kind of have to keep rates high.
Totally. I think it's a major priority. Obviously, we don't really hear that from the White House, right? Because if we're talking about tariff revenue, then we also have to be talking about who's paying that revenue, right? And a lot of times, not all the time, but a lot of times, it's the American consumer. But the truth of the matter is, on the back of one big, beautiful bill, right, we are still in a deficit crisis. And so we have to find money somewhere. We didn't find it in higher taxes. We didn't find it in reverting to pre-Trump tax cut levels. We're going to have to find it elsewhere. And I just have to say, there is revenue to be had with tariffs, of course. But there is, I think, a broader point to make from now until August 1st, and that is, if we don't have the 145% on China, right, then we really are looking at only a marginal, I don't want to call it marginal, it's more than marginal, but we're not looking at a drastic increase in tariff levels, which means we're not looking at a drastic increase in revenue levels as well.
Did you mean to call it a crisis, or was that a slip? Because in
It's
the last
early.
week, we just passed a multi-trillion-dollar bill. It's hard to call it a crisis down in Washington. What makes it a crisis?
Well, the deficit may not be in crisis, right? Because we've run wide deficits for quite a long time, and we're all still standing. But the truth of the matter is, I don't think Republicans have a solution to the deficit, what they call a deficit crisis. Trump came into Washington describing the necessity of bringing the deficit down. Of course, we can all sit here and say that Democrats have failed to do it over the previous 4 years, but it's pretty clear that Republicans are going to fail to do it, at least in this Congress, and I think very likely over the course of Trump's term.
They're certainly not behaving as if it's a crisis in Washington.
And they just passed a bill that is deficit expansionary. The U.S. is going to be selling a net more than $220 billion net over the next 5 weeks alone. This really raises a question, again, where are the bond vigilantes? Are they just pegging their hopes and dreams and the fact that the Treasury is going to sell it all in T-bills? I guess so.
It's not in the bond market this morning. 496 on 30s at the moment. Yields are marginally higher by 4 or 5 basis points on a session. Rob, it's good to see you. Thank you, sir. Rob Casey there of Signum Global Advisors. Coming up next on this programme, the former NEC Deputy Director Everett Eisenstadt, as President Trump signals he's open to trade negotiations. Plus, Yahira Anand with your morning movers this morning as Tesla shares look to rebound. That stock is higher by a little more than 1%.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Michael Zezas of Morgan Stanley and so many others absolutely nailed this. Kick the can was the base case. Kick the can is exactly what we got just yesterday. Equity futures on the S&P 500 so far, little changed on the S&P following yesterday's losses. On the Nasdaq 100, firmer by 0.2%. With 3 hours until the cash open, let's get you some morning moves and cross over to Yahira Anand. Hey, Yahira.
Good morning, John. We start with renewable stocks. They are lower in the pre-market. That's because yesterday Trump signed an executive order calling for even tighter limits on clean energy tax breaks. That's after those incentives were already scaled back in his $3.4 trillion budget. So as a result, you are seeing First Solar down 2.2%, Sunrun down 5.5%, while Enphase and Solar Edge are also lower. Moving on, we have Tesla, worth taking a look at after the stock fell 6.8% yesterday on that news that Elon Musk was forming a new political party, drawing fire from President Trump. But today it is bouncing back up about 1%. I will note that the next big catalyst for this stock is about 2 weeks away on July 23rd when Tesla reports earnings. And I want to end with Nike. Shares are slightly lower, down 0.6%. That's after President Trump sent letters to the likes of Cambodia, Indonesia, and Thailand, saying that they will see a 36% tariff if they don't strike a trade deal with the U.S. These are the exact places that Nike and other shoemakers and apparel makers diverted production to in order to diversify away from China. And this, of course, comes on the heels of that Vietnam trade deal, which cut expected tariffs down to 20%. That did add some certainty for the likes of Nike, but this is also a company that's in the middle of trying to stage a turnaround. John?
Yahira, thank you. More from Yahira in the next hour. On our radar this morning, our top story, the president ramping up pressure on trading partners, posting letters to several nations threatening high tariff rates that would go into effect on August 1st. Trump then saying the deadline and tariff rates are not 100% firm.
So obviously what you see right now is another